Good morning, everyone. Welcome to session number 3 of the CA Final Indirect Tax Laws coverage, the live coaching classes conducted by the Board of Studies Institute of Chartered Accountants of India. So, in the first two sessions, I hope most of you, whoever have seen those, are now viewing this video. We discussed the introduction to GST, the constitutional amendments. We covered the taxable event of supply in depth. We saw the concepts of mixed supply and composite supply. And we also worked out a few problems based on what all we have discussed. Any queries from your side till with regard to the previous two sessions, kindly post it so that I can look at them as well. And in today's session, we are going to cover chapter 3 of the subject, which talks about the charge of GST. When I say the charge of GST, we are going to see which section authorizes the levy of GST on the supply. We will also look at the concepts of intrastate supply and interstate supply. We will look at the concepts of forward charge mechanism and reverse charge mechanism. We will look at the concept of composition scheme. What is the turnover limit for composition scheme? And what is the tax applicability for composition scheme, and what are the services and goods which are covered in the composition scheme is what we will look at. We'll also look at in the reverse charge mechanism, what are the types of services which are covered, and cover all miscellaneous aspects related to that, and also work out certain problems. So that is basically the agenda of today's session, what we are going to discuss. So therefore, as I had told you in the previous sessions as well, the GST is an integration of most of the previous indirect taxes. So the major indirect taxes have been now combined together in the GST law, and therefore it is important for us to understand the concepts of the intrastate supply and the interstate supply, because as I told you here, both the central government and the state government, they have the power to charge the GST on the supply. So therefore, within the state, if there are any supplies which take place, then on those supplies, there will be local CGST and SGST will be collected. CGST, of course, accrues to the central government. SGST accrues to the state government. And on an interstate supply, that is supplies between two different states, in this particular situation, IGST will be applicable, which is initially collected by the central government, and later it is passed on to the state government in case any SGST credit is used for paying the IGST. This concept we had discussed in the first session of our class. So therefore, the two elements which determine whether a supply is intrastate supply or interstate supply is the location of supplier. That is the first element. And the second element is the place of supply of goods or services. Therefore, if it is an interstate supply, it is not like you have to see where the seller is located and where the buyer is located. That is not the common sense angle what we attribute here when we conclude whether it is an interstate or an intrastate supply. Two distinct events have to be taken into consideration. The first event will be the location of the supplier and the place of supply of goods or services. So these two are the two important events you have to consider, right? So what is the location of the supplier is defined in the Act. Place of supply of goods or services, there is a separate provision, separate chapter is dedicated to place of supply of goods or services. So therefore, both these elements are not common sense conclusions, but we have to get the concept very clearly. And if there is location of supplier, what does the definition say? If there is place of supply of goods or services, it is covered by section 10 to section 13 of the IGST Act, which you'll read in the place of supply syllabus. What exactly does it say? So understand that, and once you know which are the two different states which are there, based on that you conclude whether it is an interstate supply or an intrastate supply. I hope this point is clear. So therefore, if location of supplier and the place of supply, if they're in the same state or union territory, it is an intrastate supply of goods or services. In case they are in different states or two different union territories or one state and one union territory, it is to be treated as an interstate supply of goods or services. So I hope this point also is clear. Let us look at a few definitions which we will go through in the discussion in today's session. Electronic commerce, these days, e-commerce has totally changed our lives. So therefore, bringing it into the ambit of GST is one of the most important priorities of the government. So therefore, electronic commerce is what? Supply of goods or services, including digital products over a digital or electronic network. So it can be regular goods like your Swiggy or Zepto, etc. If you open your phone, you'll see what has e-commerce done to our lives. So therefore, through the digital or electronic network, if there is a supply of goods or services, it is referred to as e-commerce as per 224, 2 subsection 44. Then subsection 45 defines the term electronic commerce operator, which is nothing but a person who owns, operates, or manages whichever this platform is owned or operated. Like Swiggy is operated by Swiggy, that is bundle technology. So Uber is operated by Uber. So whoever is the person who owns, manages, or operates the electronic facility or platform is called an electronic commerce operator as per 2 subsection 45. Then aggregate turnover is defined in 2 subsection 6. This also is a very, very important definition. Why is this definition important? Because it gives you an idea of the registration, the threshold limit. So in case of your regular registration, you have a separate chapter dedicated to registration where the threshold limit is fixed at 20 lakhs and 40 lakhs for different states. So in this particular situation, aggregate turnover concept is used. Why we are looking at this definition now? Because we are going to cover composition scheme in our session today. And for composition scheme also, the aggregate turnover is defined. So how to calculate the aggregate turnover is defined in this particular section. It means aggregate value of all the taxable supplies, excluding the value of inward supplies on which tax is payable by a person on reverse charge basis. In this bracket point, we'll just come to it in 1 minute. Exempt supplies, export of goods or services or both, and interstate supplies of persons having the same PAN number to be computed on all India basis, but excludes the central sale tax, that excluding the GST, you have to calculate the turnover, right? So when you are calculating the aggregate turnover, first you have to look at the taxable supplies. Exempt supplies also has to be taken into consideration when working out the turnover. Very, very important point. Exports of goods or services also has to be taken into account. So all these you have to include, including interstate supplies of persons having the same PAN number. That means in the previous session, we also discussed that if each person has a separate business in different states, he has to get separate GST registration. So in that case, you have to calculate the aggregate turnover for all the registrations put together, right? You cannot say if I have a GST registration in New Delhi, I will take the turnover only for this, and then separate GST registration in Madhya Pradesh, a separate turnover limit for that, linked to the same PAN number. Okay, that is clearly mentioned in the definition. So if a person has the same PAN number and different GST registrations, the turnover has to be calculated for all the GST registrations put together. Now coming to what was mentioned in the bracket. Reverse charge mechanism, what exactly is this? It is something which is against the normal convention of indirect taxation. That is, in case you see in regular way of charging the GST, forward charge mechanism is applicable. That means I provide the service, I charge the respective tax from my customer, and I pay it to the government. This is the usual scenario. Reverse charge mechanism, the liability to pay the tax to the government is given to the recipient instead of the supplier of goods or services. So therefore, when I'm supplying the goods to or services to one particular person, let us say at a value of 10,000 rupees and GST rate is 18%, I will not collect 18% from him. I will collect only 10,000 rupees, and that recipient will pay that 18% directly to the government. So 18% will be paid by the recipient to the government. So therefore, that is covered under the reverse charge mechanism. So I hope that point is clear. And then the next, so aggregate turnover is a very important definition. How to calculate the aggregate turnover, you should understand. We'll also work out some problems based on this one. Then customs frontiers of India is important for us to understand when the import of goods has been taken into consideration. So it's very simple. Limits of the customs area. Okay. What is a customs area? It is defined as per the Customs Act. Area of the customs station or warehouse, including any area where the imported goods or the export goods are ordinarily kept before clearance. So customs authorities has to check whether all the taxes have been paid and all the quantities are in order before clearance. So the place where it is kept before clearance is called your customs area, right? And customs frontier is your limits of the customs area. Fine. I hope it is clear. Yeah. 2 subsection 98 speaks about the term reverse charge mechanism. The reverse charge means the liability to pay the tax by the recipient of the supply of goods or services or both, instead of the supplier of such goods or services or both, under 9 subsection 3 or 5 subsection 3 or 4 of the IGST Act. So reverse charge also is specifically defined under the GST. It means, as I told you, the liability to pay the tax by the recipient of the goods or supply of the goods or services. Fine. By the recipient of the goods or supply of the services, if the tax is liable to be paid, in that case, it comes as the reverse charge mechanism. The sections which cover this reverse charge mechanism is 9 subsection 3 and 4 of the CGST Act. Similar provisions are given in 5 subsection 3 or 5 subsection 4 of the IGST Act, right? So this is your reverse charge mechanism. Then 2 subsection 10 talks about IGST Act, which is import of goods. Import of goods, as I told you, with its grammatical variations and cognate expressions, it means the bringing goods into India from a place outside India. Very simple definition of import goods. From outside India, if you are bringing the goods into India, then it is known as the import of goods. Again, India definition also is there, because when we are referring to the term India here, so what exactly it covers from the GST angle is important. So India means territory of India as referred to in Article 1 of the Constitution. Territorial waters, seabed, subsoil, underlying continental shelf, exclusive economic zone. So all these terms you'll be covered in the customs syllabus very clearly. At that point of time, you'll understand what exactly is all of this. As such, just for understanding, it just refers to the territory as well as certain demarcated areas which are covered, and also the airspace above the territory and territorial waters. These all come in the definition of India. Non-taxable online recipient means what? Now, there is a separate concept called OIDAR services. OIDAR services is online information and database access or retrieval services, right? So here, a person, any government, local authority, individual, or any other person, but is not registered. So if any person is there and is not registered and is receiving these OIDR services, any services which are it separately benefit, this concept shall be covered in place of supply. So OIDR services is, in simple terms, in case of any database access services or database retrieval services, any particular thing related to an online information database service in relation to any purpose other than commerce, industry, etc. located, he is known as a non-taxable online recipient. So non-taxable online recipient is any person who is not registered and receives these OIDR services and located in taxable territory. Right? Explanation for clarifying the term government authority also is given. Authority or board, any other body set up by the Act of Parliament or established by the government. 90% or more equity control is the most important thing when we are talking about the term of a government authority. Right? So therefore, now we come to section 7, which speaks about the interstate supply. Which speaks about the interstate supply. Now, this section 7, please be very, very careful. This section 7 is of the IGST Act 2007, not the CGST Act. In the CGST Act, section 7 refers to the concept of supply, which we covered in the previous session. So therefore, section 7 talks about interstate supply. So therefore, what does it say? Subject to the provisions of section 10. Now, why this subjective provision is given? Because section 10 talks about the place of supply. So therefore, if section 10 talks about the place of supply, there certain specific things are given. So therefore, those provisions are first important. So these provisions you will see in the place of supply chapter. But as of now, we'll just understand in regular course, other than section 10, what exactly is your interstate supply. So subject to the provisions of section 10, supply of goods where location of supplier and place of supply are in two different states, two different union territories, or a state and a union territory, it shall be treated as a supply of goods in the course of interstate trade or commerce. As I already told you before, the two important things for you to understand, the two important things for you to know when you have to take it as a course of interstate trade or commerce is the two elements are, one is the location of the supplier and the place of supply. So if there is in two different states or two different union territories or in one state and one union territory, it shall be treated as a supply of goods in the course of interstate trade or commerce. Then second important subsection of section 7 talks about import of goods. So import of goods also are to be taken as the interstate trade or commerce. Very, very clear. So therefore, any supply of goods which are imported into the territory of India till they cross the customs frontiers of India shall be treated to be a supply of goods in the course of interstate trade or commerce. So any supply of goods which are imported into the territory of India till they cross the customs frontiers, okay, shall be treated as supply of goods in this. So therefore, very simple, import of goods also is interstate supply. As very, very simple, so section 7 subsection 2 clearly gives this point. Then subject to the provisions of section 12, very simple, 7 subsection 1 and 7 subsection 2 speaks about the interstate supply of goods. Similarly, 7 subsection 3 speaks about the services. That is the difference between the previous two subsections and this provision. So it is pretty much the same, but only thing is 7 subsection 3 refers to services total. So subject to provisions of section 12. Again, why this subjective provision is there? Because section 12 gives a clear understanding of the place of supply of services in different cases. So obviously subject to that provisions. Supply of services where location of supplier and place of supplier in two different states or two different union territories or one state and one union territory shall be treated as supply of services in the course of interstate trade or commerce. Fine. That is your 7 subsection 3. And similarly 7 subsection 4, like you're importing the goods, you will import the services as well. Okay, if you're procuring services of any nature from a person outside India. So therefore, this is a supply of services imported into the territory of India shall be treated as supply of services in the course of interstate trade or commerce. Fine. That is your 7 subsection 1, 2, 3 and 4. Now we come to certain specific cases where it is an interstate supply. So what are those cases? Let us see. So 7 subsection 5 here covers both the goods or services or both. So very simple. 7 subsection 1 and 7 subsection 2 refers to goods. 7 subsection 3 and 7 subsection 4 refer to services. And 7 subsection 5 covers both the goods or services or both, but in specific cases. So what are these services? First one, where the supplier is in India and the place of supply is outside India. Something like an export of goods or an export of service. That is, the person who's supplying is in India, but the place of supply is occurring outside the India. So this is one option. Second one, if a supply or goods or services is made to a special economic zone developer or a special economic zone unit, right? What is a special economic zone? Demarcated zones within the country, which gives the benefits of the same benefits what is given to the outside the country. So it is like as if this special economic zone is located outside the country only. It's as if the special economic zone is located outside the country only, what we have to see. So therefore, to or by a special economic zone developer or a special economic zone unit. So if you are located within the state, in your state itself, there is a special economic zone and you are providing a service to that special economic zone. Please be aware that it is a interstate supply. It is an interstate supply because a special economic zone for all purposes, it is to be treated as a place outside India. So therefore, it comes under a export of service only. Therefore, it is an interstate supply. Fine. And the next one, any supply in the taxable territory not being intrastate supply and not covered elsewhere in this section. So a residuary provision also is given. That is, if there is any supply, it is not an intrastate supply for sure. and is not covered anywhere in this section, in this particular section 7. This also is to be taken as a interstate supply. That is your 7 subsection 5. Shall be treated to be as a supply of goods or services in the course of interstate trade or commerce. Fine. I hope these points are clear. Let me see if there are any queries. Fine. So I hope all of you who have attended in the previous sessions are attending this session, because it's very important for the continuity purposes. So let us just analyze what is the 7 subsection 1 and 2. Supply of goods in the course of interstate trade or commerce. The two terms which are given here is very, very important. Location of supplier of the goods is there, and the place of supply also is there. So these two are the important point. And supplier of goods definition is clearly not given in the Act, but we have to see based on the facts and circumstances. Place of supply, again, you cannot give it a common sense understanding, because it is clearly exhaustively covered by section 10 to section 13 of the IGST Act 2017. Then supplies outside India, as I told you, supply of goods which are imported into territory of India till they cross the customs frontiers shall be considered as a supply of goods in the course of interstate trade or commerce. Similarly, import of goods means bringing the goods into India from a place outside India, that also shall be covered. Then 7, 3 and 4 talks about the services, where the location of supplier and place are in 2 different states, interstate supply. And location of supplier of services is defined in the CGST Act 2017. Though location of supplier of goods is not defined, location of supplier of services is defined. Because if a supplier of goods, it is easy to understand, because the goods are present there, he is also present there. So what is the supplier, location of supplier of goods can be easily understandable. But in case of location of supplier of services, which is defined in this particular section, 2 subsection 71, it says that where a supply is made from a place of business for which registration has been obtained, right? If a supply is made from a place of business for which registration has been obtained, then the location of such place of business is to be taken into consideration as the location of supplier of services, right? So you have a place of business. What this place of business you have obtained the GST registration. The location of such place of business is to be taken into consideration. Second one, where the supply is made from a place other than the place of business for which the registration has been obtained, right? In that case, the location of such fixed establishment is to be taken into consideration. So if it is made from a place other than the place of business, okay, supply is made from a place other than the place of business for which registration is obtained, such fixed establishment location has to be taken into consideration, right? If it is, if the supply is made from more than one establishment, okay, so if you have 2 different establishments within the same state, and you are making the supply from more than one establishment, whichever is directly concerned with the provisions of the supply, that particular location has to be taken as the location of supplier of service. In absence of the above 3 places are not there. In the absence of those places, the usual place of residence has to be taken into consideration as the location of supplier of services. Fine. Then import of services also is covered in section 7. As I told you, if you are importing any services into the territory of India, it shall be treated as a supply of services in the course of interstate trade or commerce. Import of services is defined under 2 subsection 11 of the IGST Act as supply of any service where the supplier is outside India, recipient is in India, and place of supply in India. So import of service is also very important definition. Here 3 events are covered. First event is supplier is located outside India, recipient is in India, place of supply is in India. If these 3 conditions are fulfilled, then it is an import of service as per 2 subsection 11. Right? So again, 7 subsection 5 speaks about the goods or services or both where the supplier is in India and place of supplies outside India. Very important to note here that in this case, location of recipient is not relevant. In this case, place of supply is relevant. So therefore, what is place of supply? Again, 10 to 13 of the IGST Act will have exhaustive coverage. So therefore, whatever is the place of supply, you have to see that here. And supplier of goods or services also needs to satisfy some conditions to qualify as the export of goods or services. Right? So that is your 7 subsection 5, which is export of services, which is referring to your thing where supplier is in India and the place of supply is outside India. That is covered in this particular topic, that is your 7 subsection 5. Then the next portion what we discussed was the supply of goods or services to or by a special economic zone developer or a special economic zone unit. So if you are supplying the goods or services to or by a special economic zone or unit, in that particular situation also, it is an interstate supply. So what is a SEZ or a special economic zone? Geographically bound zone within India, where economic laws with related to export or import are more liberal as compared to other parts of the country. So therefore, an important point here is the second para, if you see, for all taxable purposes, for all tax purposes, SEZ is considered to be a place outside India only. Okay, it is not a place within India, even though physically is located in India, it is considered to be a place outside India only. And any supplies which are made to the SEZ unit or even to the developer of the special economic zone is an interstate supply. Therefore, here place of supply is not relevant at all. In case of supplies to the SEZ, it is something like an export of service. If you're providing the service to an SEZ, it is as if the place of supply is outside India only. Fine. Then residuary clause, as I told you, 7 subsection 5. In case in any other provisions, the supply is not covered in anywhere elsewhere in this section, okay, which is not an intrastate supply, it is not covered anywhere in this section. Such supply also is an interstate supply. So therefore, it is a residuary clause, covers all the supplies other than those not covered under provisions determining the intra or the interstate supplies. Section 8 refers to intrastate supply. What is intrastate supply again? It is a supply of goods or services in the same state. So that is again, location of supplier and place of supply are located in the same state, then it becomes an intrastate supply. So subject to the provisions of section 10. Again, the subjective provision is given to section 10 because section 10 talks about the place of supply in certain specific cases. So subject to those provisions, the supply of goods where the location of supplier and the place of supply are located in the same state or same union territory shall be treated as an intrastate supply. However, the following supply of goods shall not be treated as an intrastate supply. Again, supply of goods to or by a special economic zone developer or a special economic zone event, this will not be treated as an intrastate supply. Why? We have just discussed in section 7. Then goods imported into the territory till they cross the customs frontiers also will not be treated as an intrastate supply. The third interesting point is supplies made to tourists referred to in section 15. So therefore, this particular supply is specifically excluded by virtue of the definition, by virtue of the section 8. What does it say? If there is a tourist, foreign tourist is coming in into India, okay, he is say located in Delhi. He is a tourist located in Delhi, and he has purchased something, some item in Delhi. In that particular situation, CGST and SGST will not be applicable, but IGST will be applicable. Even though he is in the same state, even though the person from where, the shop from where he is purchasing is also in the same state, CGST, SGST is not applicable. IGST will be applicable. This is clearly given in the section itself. Section 15 also covers this particular point, where the tourist is clearly mentioned as per the IGST. Fine. So important point, please everyone make a note that supplies which are made to a tourist referred to in section 15 is also not an intrastate supply. Clearly given that it is specifically not to be considered as an intrastate supply by virtue of this particular section. Similarly, 8 subsection 2 speaks about the supply of services subject to the provisions of section 12, which deals with regard to place of supply of services, where the location of the supplier and the place of supply of services are in the same state or in the same union territory, they shall be treated as an intra-state supply, right? So therefore, in this particular situation, where a location of supplier, place of supplier in the same state, it is an intra-state supply. Again, here also similar provision is given, where an intra-state supply of services shall not include the supply of services to or by a special economic zone developer or a special economic zone unit. So I hope this is also clear. An explanation is given, which is again similar to the explanation what we have seen in the last class, which speaks about the distinct related person or the distinct person. So last class we had seen the concept of the related persons or distinct person, wherein supplies which are transactions which are to be taken as a supply for no consideration. There we saw the concept of distinct person. Same concept is also covered here. So where a person has an establishment in India and any other establishment outside India, or establishment in a state of union territory and other outside that state, or establishment in state or union territory and another establishment being a business vertical, that means in same state also you can have two different GST registrations with different business vertical. Two types of business are there. These two types of business, they have two types of GST registrations within the same state. Both shall be taken as an establishment of distinct persons. Okay, in this particular, so therefore here why this point is important here, because if they are distinct persons, the supplies between them also shall be taken separately for the purpose of GST. That is why an explanation to this effect has been given. An explanation to a person carrying on a business through a branch or agency or a representational office in any territory shall be treated as having an establishment in that territory. So even though there is a branch or agency or representational office, it shall be treated as having an establishment in that territory. I hope these explanations are clear. Non-taxable online recipient is not understood. Don't worry, Kaushiki. See, in simple terms, non-taxable online recipient is what? You are procuring some services, that is OIDAR services. If there is time, we will cover that also in today's session. But OIDAR services you will understand better when place of supply is being covered, because it has some important associated concepts with that. What is OIDAR services? Any type of services with regard to online information database access retrieval services. Like if you want me to take an example here, you are conducting a search. You are conducting a search of all the US pharmaceutical companies. You want to know what is the performance of the pharmaceutical companies in USA, for which you need to have the access to the database. So from here, you are a person who are not registered. You are a person, you are not registered, and you procure the services from online. You procure the services online, right? And that for the person supplier of services outside the country, he renders you the services and you are not registered. That means you are a non-taxable online receipt. As simple as that. You are not taxable. Why? Because you are not registered. Why is this important here? Because in OIDR services, place of supply is specifically given, right? That is why this point is important here. I hope you got some clarity based on this. Once we cover OIDR services, you will understand this point in a better manner. Yeah. So just to understand again what is 8.1 and 8.2 talks about the location of supplier of services and the place of supply. If it is in the same state, etc., then it is chargeable to CGST and SGST. And also a provision to section 8.1 is there. A special economic zone also shall not be considered as a intrastate supply. So these points are important for us to understand the concepts of the interstate supply. As I told you again, supply to the tourist shall also not be considered as an intrastate supply here. Tourist explanation to section 15 of the IGST Act defines the tourist as a person not normally resident in India who enters India for a stay of not more than 6 months for legitimate non-immigrant purposes. Not more than 6 months he comes only for the purpose of tourism, for non-immigrant purposes. That is, he has no intention of migrating into the country. He is a tourist. So if this tourist purchases something in that particular situation, it attracts IGST, and CGST and SGST will not be applicable. And goods imported into India also, IGST will be applicable based on this one. Distinct person we have already covered in the previous session. As I told you, if there are two different establishments of the same person, it is known as a distinct person. This same person can have an establishment here in India and establishment outside India. Same person can have establishment in one state and other state, or also in the same state with two different GST registrations for each business vertical. If he has opened another GST registration, that also is covered here under the distinct person. Branch or agency also shall be treated as an establishment of a distinct person. Now, there is a very interesting point with regard to supply of banquet service to special economic zone, right? So, there is a special economic zone, okay, which is located in the state of, let us assume it is located in New Delhi, right? They may have some service with regard to accommodation requirements of their employees, or for conducting a conference, or if they need to book any banquet service, if they need a hall for some particular event. In that particular situation, the question was asked whether it is to be treated as an interstate supply or an intrastate supply. Why this question was asked? For this, we have to just go to section 12 of the IGST Act to understand what that provision says. Section 12, subsection 3, clause C of the IGST Act refers to the place of supply of services by way of accommodation in any immovable property for organizing the function. That is, it's simple, in simple terms, say a hotel, okay, or an immovable property in this case means hotel. So accommodation in immovable property for organizing the function, nothing but the banquet space. In that case, the place of supply shall be the location where the immovable property is located. Simple example I will tell you. Now, you are located in New Delhi. You travel to Bangalore, Karnataka, and you are staying in a hotel there. Let us say Taj something, Taj XYZ hotel in Bangalore you are staying. So location of supplier of services is Bangalore, Karnataka. Place of supply is what? Specifically given in section 12. Place of supply is the place where the immovable property is located. Place where immovable property is located in Bangalore. Location of supplier of services in Bangalore. So therefore, it is an intrastate supply. It is an intrastate supply. It does not matter whether you are from Delhi or you can be from anywhere. The moment you go to Bangalore, Karnataka and stay in a hotel there, it is to be treated as an intrastate service. It is intrastate service. Location of supplier hotel is there. Place of supply is the place of immovable property. This is what 12 subsection 3C mentions. Now, special economic zone located in the same state. They take one hotel on hire in the state, take the banquet services. What is the situation? So therefore, it's very, very clear. Here you have to go to the basic interpretation of statutes, what you have in your corporate law syllabus. You have to interpret as to what has to be done. In case of an apparent conflict between two provisions, each provision says something different. Understood? Each provision says something different. The specific provision shall prevail over the general provision. Right? I hope this point is clear. In case of interpretation, if there is a conflict between two provisions, specific shall always prevail. So in this case, what is a specific provision? 7 subsection 5 is the specific provision, because it clearly says that any services which are provided to special economic zone shall be interstate supply. So therefore, it's clarified that any accommodation, conference or banquet services which is provided to a special economic zone developer it should be considered as an interstate supply only and not an intrastate supply. Even though section 12 subsection 3 clause C says that if the location of immovable property is there in the state and supplier of that service is in the state is an intrastate supply, since the specific provision 7 subsection 5 clearly mentions that it is not to be treated as an intrastate but to be taken as an interstate supply of service, we have to consider only that, and in this particular situation it shall be treated as an interstate supply. You can definitely expect a problem based on this particular concept. Any doubts? No, fine. So that is your just an interesting concept based on the banquet or accommodation service which is provided to a special economic zone. Now we come to section 9 of the IGST Act, which talks about the supplies in territorial waters. Sometimes the supplies can happen in the waters of the country. In the ship also the supplies can happen. So what is to be taken with regard to that? So notwithstanding anything contained in this act, where the location of supplier is in the territorial waters, the location of the supplier has to be taken as the place of supply. Or where a place of supply is in the territorial waters, right? The place of supply shall be deemed to be the coastal state or union territory where the nearest point of the appropriate baseline is located. So how to determine the location of supplier is in the territorial waters, whichever is that particular location of supplier of supply has to be taken into consideration. But where the place of supply is in territorial waters, it shall be the nearest point of baseline, that is the nearest coastal state. If the ship is in the territorial waters, which is the nearest coast, that particular state has to be taken as the place of supply, right? So therefore, what is this territorial waters? Just to further understanding, it determines the location of supplier and the place of supply, where the location of supplier and the place of supply are in the territorial waters. What is territorial waters? A belt of coastal waters extend up to 12 nautical miles from the baseline of the coastal state. Again, territorial waters is covered in great detail in customs. It's not defined anywhere in GST. So location of supplier is in the ship in the territorial waters. Then the place of supply shall be the nearest coastal state or union territory where the nearest point of the appropriate baseline is located, right? And section 9 as of now is the chargeability section. This again section 9, we come back to CGST. 9 supply territorial waters of the IGST. We just went to section 7, 8 and 9 of the IGST Act to discuss the concept of interstate supply. Now we are back to CGST Act 2017, which talks about the chargeability. Fine. Section 9 only mentions the chargeability as to, it clearly says that the goods and service tax will be levied. So therefore, what does it say? Subject to the provisions, okay, section 9 of the CGST Act, similar provisions are covered in section 5 of the IGST Act. You don't need to remember the sections of the IGST Act unless for place of supply of services, place of supply of goods, the 10 to 13 of the IGST Act you may have to remember. Apart from that, mainly it is CGST Act only what we are going to discuss. So subject to the provisions of subsection 2. What is subsection 2? We'll just go to it now. There shall be levied a tax called as the central goods and service tax, right? Subject to provisions of subsection 2, there shall be levied a central goods and service tax on intrastate supply of goods or services or both, except on the supply of alcoholic liquor for human consumption. Alcoholic liquor for human consumption, it is excluded in the constitution itself. And again, here also in chargeability section also he has clearly excluded it. Okay, chargeability section also is clearly excluded that. So what does it say? Subject to the provisions of subsection 2, there shall be levied a tax known as the central goods and service tax on all intrastate supplies of goods or services or both. On everything it shall be levied except on the supply of alcoholic liquor for human consumption on the value determined under section 15. Section 15 of the CGST Act talks about value of supply. So how to determine the value of supply is given in section 15. So on that particular value, once you derive, on that the GST shall be applicable. At such rates not exceeding 20% as may be notified by the government on recommendations of the council and collected in such manner as prescribed and shall be paid by the taxable person. The rate, when I say 20% here, it is only CGST 20%. That to up to 20% maximum CGST you can raise. Since same provisions are covered in the state laws as well, there also 120% will obviously be mentioned. So therefore, the total GST rate of both CGST and SGST put together should not cross 40%. That is the conclusion. So at such rates not exceeding 20% as may be notified, collected in such manner. So the cap of the rate also is given. That is, you have to levy the tax on these particular items other than alcoholic liquor for human consumption on the value determined under section 50, right? At such rates not exceeding 20%. I hope this point also is clear. That is your chargeability section. Then, as we already discussed before, the on these particular supplies, that is petroleum crude, high-speed diesel, motor spirit, natural gas, aviation turbine fuel. On these 5 items, the central tax shall be levied with effect from such date as may be notified by the government on the recommendations of the council. So these 5 products at present there is no GST, but definitely there will be GST applicability in the future. Definitely there will be GST applicability in the future. That date shall be notified by the government or depending on the recommendations of the GST council. Right? That is your 9 subsection 2. So 9 subsection 1 talks about the tax levy, right, on all the products or services other than alcoholic liquor for human consumption. 9 subsection 2 speaks about the 5 products on which GST will be applicable from the later date as being notified by the council. 9 subsection 3, very, very important, speaks clearly about the categories of supply of goods or services or both, the tax which shall be paid on reverse charge basis. Right? So 9 subsection 3 mentions the category of supply of goods or services, and a separate notification has been issued which clearly talks about the goods or services which are subject to reverse charge mechanism. Right? So what does 9 subsection 3 says? That the government may, on recommendations of the council by notification, specify categories of supply of goods or services or both, the tax on which shall be paid on the reverse charge basis by the recipient of goods or services, and all the provisions of the act shall apply as if he is the person liable to pay the tax. As if he is the person liable to pay the tax, all the provisions shall automatically apply. That is your 9 subsection 3. I hope you got the clarity on this. We shall go through the notification also subsequently to see what all goods or services are listed in that. 9 subsection 4 speaks about, again, this is very similar to 9 subsection 3, but here the particular category depends on registered person and unregistered person. That is the difference. So what does it say? 9 subsection 4 says that the government may, on recommendations of the council by notification, specify a class of registered persons who shall, in respect of supply of specified category of goods or services or both, receive from unregistered supplier, pay the tax on reverse charge basis as the recipient of such supply of goods or services. All the provisions will apply as if he is the person liable to pay the tax. What does this mean? It says that the government may specify some registered persons. If this registered person is procuring certain specified category of goods or services, that is very, very important. If he is procuring certain specified categories of goods or services from unregistered person. So if you are procuring from unregistered person, definitely that person is not there under GST. So he need not collect any GST. Why? Because he is unregistered. But in this case, what happens? If I am procuring services or goods from him, on that I have to pay on reverse charge to the government. This is what 9 subsection 4 says. Now, what are those category of services? We will discuss shortly. Right? As of now, just remember, in case of a class of registered persons, with regard to specified category of goods or services, if I am procuring from the unregistered person, I have to pay the tax on the reverse charge basis as if I am the person liable to pay the tax. So what is the difference between 9 subsection 3 and 9 subsection 4? 9 subsection 3 speaks about specified categories of goods or services which are straight away under the reverse charge. Registration and lack of registration have nothing to do with that. Even if two persons are registered and the case falls under 9 subsection 3, still the reverse charge will apply. But 9 subsection 4 is not like that. 9 subsection 4 says that if you are a registered person, certain specified category of services you are procuring from non-registered person, you are not collecting GST from it, but you have to pay GST directly to the government. Okay, I hope it is clear. You have to pay GST directly to the government. That is your 9 subsection 4. I hope these sections are clear till now. Any queries? Please feel free to post any queries on whatever discussion, because these are all slightly critical points in our discussion. And reverse charge is quite important from the exam point of view as well. So that was your 9 subsection 4. So we have seen 9 subsection 3, 9 subsection 4. Now we come to 9 subsection 5. 9 subsection 5, what does it say? It says that the government may, on recommendations of the council by notification, specify category of services. The tax on intrastate supplies shall be paid by e-commerce operator if such services are supplied to it. Okay. So what does 9 subsection 5 say? 9 subsection 5, first thing, refers only to services. That you have to understand. It does not refer to goods. So therefore, the moment it refers only to services, the next point is, what are the category of services which it refers? Okay. So the government may specify the categories of services, the tax which shall be paid by the e-commerce operator, and provisions of this act shall apply to such e-commerce operator as if he is the supplier liable to pay the tax. So very, very simple point. What does it mean? After these e-commerce operators have come into existence, let us take an example of Uber. You book a cab through Uber. The recipient of supply, that is the customer, is yourself. The supplier of service is actual supply of this travel service is the driver of the car. But he is from an unorganized sector, so he does not have the GST. I am not expected to have a GST because I just booked the cab from going to one place to the other. In such cases, the government has identified that there is a revenue leakage. There is a revenue leakage and no GST is being paid to the government. So that is why what the government has done is, in such cases, it has given responsibility to the e-commerce operator. This is also a type of reverse charge mechanism. But here, neither the supplier nor the recipient is paying the tax, but the e-commerce operator is providing the tax. Okay, so therefore, all the provisions shall apply to him as if he is the supplier liable for paying the tax. As if he is the supplier liable for paying the tax. So therefore, driver will not collect any GST from me. I will not pay any GST. I will pay the GST to the cab company because the cab fare plus GST is included. But the liability of paying the GST to the government is on the cab operator. That is, Uber takes care of the amount of GST to be paid to the government. However, in case the e-commerce operator does not have a physical presence, any person representing such e-commerce operator for any purpose, he shall be liable to pay the tax. So this was your 9 subsection 5. And also sometimes what will happen? He does not have a physical presence and he does not have a representative also. Then such e-commerce operator will appoint a taxable person, will appoint a person in the taxable territory for the purpose of paying the tax, and such person shall be liable to pay the tax. That is your 9 subsection 5. So therefore, important points in section 9. Again, it's a chargeability section. CGST shall be levied on the intrastate supply of goods or services. Alcoholic liquor for human consumption outside the purview of GST. The rate of GST, whatever is specified, is multiple rates are given. 0, 0.125, 1.5, 2.56, 9 and 14. Again, as I told you, these are only the CGST rates as per the CGST law. Similar rates are given in SGST also. So therefore, total has to be considered for purpose of allocating the GST rate. So if I say 9% is the CGST rate, total of 18% GST has to be collected, out of which 9% is central government and the other 9% is the state government. Maximum rate of CGST can be 20%, which means along with SGST, it can be 40%. Goods imported into India, again, all imports are interstate supplies. Accordingly, IGST will be levied on the imported goods, right? And let us look at what are the scenarios covered in the reverse charge mechanism. The CGST or IGST shall be paid by the recipient of goods or services on reverse charge basis in the following cases. One, where the supply of goods or services as notified, so specific notified goods or services by the government. On that, instead of the supplier paying the tax, the recipient will pay the tax. In case of specified category of goods or services by unregistered supplier to specified class of registered person. So I am a registered person. I am procuring the goods or services from an unregistered person with regard to specified categories, which we will discuss at a later point of time in today's session itself. In that particular situation, the person who is procuring from the person is registered. He is procuring from an unregistered person. So he has to pay the same on the reverse charge mechanism. Okay, and all the provisions will apply as if he is the person liable to pay the tax in relation to the supply of the goods or service. This is an important. So right. So as if he is the person, the the provisions will apply with regard to the same. Now let us look at the first scenario. Supply of specified category of goods or services covered under 9 subsection 3. So here the goods or services will clearly be notified. So what are the goods notified under 9 subsection 3, wherein the liability to pay the tax is on the recipient of the goods. First is cashew nuts, BD wrapper leaves, tobacco leaves, raw cotton, which is supplied by agriculturist to any registered person. Supply of lottery, when it is supplied by the state government, union territory to lottery distributor. So in these cases, the recipient of goods has to pay the GST directly to the government. Supplier need not collect. Recipient will calculate and pay himself directly to the government. Right? Silk yarn, used vehicles, seized and confiscated goods, all these come under the reverse charge mechanism. Your used vehicles means what? Now, you are owning a car and you are selling it to a dealer. Okay, you are selling it to a dealer. The dealer purchases the car, so therefore, obviously, for resale only he will purchase. So there he has to pay the GST on the reverse charge mechanism. Seized and confiscated goods, old and used goods, waste and scrap, when supplied by the state government, etc., to any registered person, if waste or scrap is supplied, they are taxable under the reverse charge mechanism. So that is your goods notified under 9 subsection 3. Goods notified under 9 subsection 3 are not very important, but services notified under 9 subsection 3 are very, very important. This notification is given 13/2017, dated 28th June 2017, gives the list of services which are subject to reverse charge mechanism. Please bear in mind that all these, most of the services which is given in the list have been taken from the reverse charge mechanism which was prevalent in the time of service tax. So reverse charge mechanism is definitely not a new concept. It was always there. It was there in service tax before, and now it has come into the GST net. It is mainly for the unorganized sector, because in this particular situation, it is better the recipient pays the tax directly to the government, because the suppliers are mostly from the unorganized sector. So that is why this concept of reverse charge has been introduced. Now we come to the list of services which are given under the notification. First one is, 4 columns are given here. First one is the category of services given, then whoever is the supplier of services given, and recipient of services given. So in these cases, reverse charge mechanism will be applicable. Fine. Supply of services by a goods transport agency in respect of transportation of goods by road. So you are a goods transport agency. Goods transport agency, what is the significance of this word? Goods transport agency will come when consignment note is generated. When is consignment note generated? When the responsibility of the package to be transported is totally taken up by the goods transport agency, then the consignment note is given, and in that particular situation this will cover. So if the GTA provides the services of transportation of goods by road to all these recipients, what are the recipients which are given? Factory, society, cooperative society, any registered person, body corporate, partnership firm, casual taxable person. Okay, in that particular situation, and the service provider is the goods transport agency, then reverse charge mechanism is applicable. Again, here the most important condition is the goods transport agency who has not paid CGST at the rate of 6%. What does this line mean? Let us go to the next slide. Why this is important here is, for the government has given the option or choice to the GTA for paying the taxes at either of the two rates. The first rate is 5%. 5% provided the GTA has not taken the input tax credit of the goods or services used in supplying the GTA service. So first point is, it is 5% without input tax credit. So GTA providing the service, it is 5%. Second one is what? At 12%, where GTA opts to pay at the said rate on all the services of GTA, input tax credit also is available. So two options are given to the goods transport agency. Either you pay 5%, don't claim any input tax credit, or you pay 12% and claim any input tax credit. So therefore, in this situation, this reverse charge mechanism will trigger only if the goods transport agency does not opt for the 12% GST thing. If the goods transport agency opts for 12%, then in that particular situation, this reverse charge will not. It will come only if the GTA does not take the option to pay at 12%. That is what is the condition which is given. GTA who has not paid CGST at the rate of 6%. Right? I hope it's clear. Right? Also, reverse charge mechanism shall not apply in certain cases. What are those cases which are given? If a goods transport agency provides the services of transport of goods in a goods carriage by road to a department or establishment of the central government, state or union territory, or local authority or government agencies who have taken registration under CGST Act only for the purpose of deducting tax under 51 and not for making a taxable supply of goods or services. Again, if you see, a separate section is being referred here. What is this section? So, very simple, let us understand. Services reverse charge mechanism, what all are covered? That is what we are discussing. Out of that, GTA is being covered. So when we come to GTA, what is exactly a GTA? I hope we understood that. Wherever a consignment note is generated and responsibility of the goods, of the responsibility of the delivery of the goods is taken totally by the goods transport agency. So in case of a goods transport agency, two methods of taxation are given as an option to the GTA. First option, it says that you pay a total tax of 5%. Don't claim any input tax credit. Second option, you pay total tax of 12% and claim the input tax credit. Reverse charge will trigger only if the second option is not utilized by the GP. That is 12% option is not utilized, then reverse charge will trigger. Right? In some cases, reverse charge will not apply at all. That is services provided by transport of goods to department, central government, state government, local authority, government agencies, which has taken GST registration under CGST only for the purpose of tax deduction under 51. Section 51 of the CGST Act talks about tax deducted at source in case of supplies made to the central government or local authority of more than 2,50,000. That means you are a public sector company, you are a government company, you give a contract to a person. I assume construction contract, you give for rupees 3 lakhs. When you are paying 3 lakhs to him, you have to deduct the tax at source at the rate of 1%. In income tax, TDS also is there. Same type of provision is brought in GST also. 1% TDS will be applicable on that as per section 51. So the central government, though it may not be eligible for registration, just for the purpose of deducting this tax, if they take the registration, in that particular situation, and to such persons, the goods transport agency provides the services, reverse charge mechanism will not apply. I hope this condition also is clear. So that is your first service of GTA service. Second one is services provided by an individual advocate, including a senior advocate or firm of advocates, by way of legal services. So it can be individual advocate, or it can be any senior advocate or a firm of advocates. They provide the legal services directly or indirectly. To whom? To any business entity. To any business entity located in the taxable territory. Legal lawyers as such are already always very strong when it comes to lobbying. What do you mean by lobbying? By fighting for their rights. Even when service tax had come, the initial proposal was to make lawyers pay service tax also, but the lawyers categorically denied, saying that legal services is something more of an essential service, and therefore the headache or liability of paying the GST should not be given on them, but on the recipient. So therefore, any services provided by individual advocate, a senior advocate, or firm of advocates, if he provides the service to any business entity, the tax has to be paid on the reverse charge mechanism by the business entity. Third one, service supplied by arbitral tribunal to a business entity. Arbitral tribunal is basically set up, a small court which is set up for the purpose of settlement of disputes. So in that particular situation, if the services are provided to any business entity located in the taxable territory, then it shall be chargeable to tax under the reverse charge mechanism. Fourth one, also very important from exam point of view, services provided by way of sponsorship to any body, corporate, or partnership firm. So in a sponsorship transaction, there are two parties. One is the sponsor and one is the recipient of the service. So whoever is providing the service is the sponsor, that is the event organizer. So any person, but the recipient has to be body, corporate, or partnership firm. Body corporate means what? All companies, all private limited companies, including foreign company, comes under the term body corporate. So if I am providing sponsorship to a body corporate or partnership firm, let us say I'm organizing a cricket tournament. I have gone to Reliance Industries for the purpose of becoming a title sponsor for my tournament. So once I go to Reliance Industries for becoming title sponsor, and I am the supplier of the sponsorship service, and this person gives the sponsor of say 1 crore rupees. So 1 crore rupees sponsorship I am raising from him. For this 1 crore, I will not charge any GST to him. He has to pay on the reverse charge mechanism. So here, so let us assume my company name is XYZ Event Management. XYZ Event Management goes to Reliance Industries, close the sponsor of 1 crore rupees. It will pay 1 crore rupees to me. I will not collect 18% extra from him. He will pay 18% directly to the government. That is the concept of reverse charge with regard to sponsorship of services. Next one, the services supplied by the central government, state government, union territory, or local authority to a business entity, excluding few services, right? So here what is happening? The supplier of service will be either the central government, state government, union territory, or local authority. Either of these four will be the supplier of service. The recipient of service shall be the business entity located in the taxable territory. But all services are not covered. Renting of immovable property is not covered. That is, if you are a government organization, you have an office in your possession, you are giving out on rent to any particular business entity, reverse charge will not come here. Then specified services like Department of Post, postal services, courier services, services in relation to aircrafts, vessels, etc., that will be covered. Again, transport of goods or passengers also is excluded. So other than these services, if you are providing any other service, and if you are a central government, state government, union territory, etc., and you're providing the service to any business entity, then on this reverse charge mechanism shall be applicable. I hope everyone are following. Any queries, please feel free to post. In case of territorial waters, it implies it would be intrastate. No, it is not intrastate because the supply is happening in the waters. So if the supply is happening in the waters, how exactly we have to do it? Location of supplier will be there in the ship and place of supply will be there in the nearest baseline, right? Location of supplier, when it will be intrastate supply, let me take an example. Now, Mumbai coast is there. Supplier of services, he has his registration in Maharashtra. Okay. And he is supplying some services. It can be, let us assuming restaurant services. He is supplying restaurant services on the ship. Now, the ship, the closest coast is Mumbai, Maharashtra. Then it will become an intrastate supply. Why? Because location of supplier in Maharashtra, place of supply also Maharashtra. But if the supplier is from Mumbai and the closest baseline is coming to Vizag, not Mumbai, then the place of supply is the location of the baseline, which is Vizag, which is Andhra Pradesh, will be your place of supply. And location of supplier is Maharashtra. Then it will be an interstate supply. So it purely depends on the location of the supplier of service when it will be interstate supply or intrastate supply. Fine. I hope it's clear. Fine. So that was section 5, which speaks about the services supplied other than renting of immovable property, other specified services, and transport of goods or passengers. Then 5A is the services supplied by way of renting of immovable property. Why was renting of immovable property excluded before? Because 5 refers in point number 5, where we are talking about this particular aspect. The recipient of service is any business entity. The recipient of service is any business entity. Why is renting of immovable property not covered? Because renting of immovable property, it wanted to apply to any registered person. So that means if any renting of immovable property service is provided by central government, state government, union territory or local authority to a person registered under the GST Act 2017, then it shall be chargeable under the reverse charge basis. Next one, 5B. Services supplied by a person by way of transfer of development rights or floor space index, including additional FSI for construction of a project by the promoter. What is this? Simple. Development agreements, which has been the most complicated segment in GST for treating. So therefore, in this case, what happens? I have a piece of land. I have, say, 500 square yards land. Now, this land, what I have done? I have given it on development. Okay, I have tied up with a builder. I told the builder, please take this land on development. Make, say, 10 flats on it. Please give me 6 flats and you take 4 flats because you're doing the development for me. So here what is happening? I am surrendering a portion of land and I'm getting constructed area in benefit. So this service is transfer of development rights. So therefore here I am owning the property. I am not selling the property to this guy. I am giving the property on development. So therefore development rights, TDR, transfer of development rights. That is, if I am the owner, the right to development is always vesting in me. But when I'm giving it on development, I'm transferring the right to develop to the developer. I'm transferring the right to develop to the developer. So who is the supplier of service here? Any person is the supplier of service. Recipient of service is what? Promoter. That is, the developer is the recipient of service. So if I'm transferring the development rights to that particular person, I have to value the development rights. How to value the development rights? You will see in value of supply chapter. So I have to value the development rights. So on this total value, whatever is the GST which is applicable, the recipient of service, which is the promoter, who is the developer, he will pay the GST on reverse charge mechanism. Fine. I hope this point also is clear. 5B. Then we come to 5C, which speaks about long-term lease of land. Any person is there who is giving a long-term lease of land, that is 30 years or more, against consideration in form of upfront amount. Upfront amount gives for 30 years development charges, salami, it can be called as any name, or it can be a type of a periodic rent also. In that particular situation also, supplier of service, any person, recipient who is the promoter, has to pay the GST on reverse charge basis. So long-term lease of land, transfer of development rights, promoter has to pay the on reverse charge mechanism. Another very, very interesting concept which is covered in the reverse charge mechanism is the services supplied by director of a company or body corporate to the said company or a body. So therefore, you are a director of the company and you are providing certain services to the company. Okay, you are providing some services to the company. It can be two types what you can provide the service. Either you can be a full-time employee of the company, you being the director of the company. If you're a full-time employee of the company, then straight away there is no GST applicable, employer-employee relationship is there. However, apart from being an employee, there are also chances that you get paid some sitting fee. That is, if you're attending the board meetings, you get paid some sitting fee. And apart from the sitting fee, sometimes other consulting services, freelance services, professional services also is being provided. In that particular situation, if the supplier is the director of the company, the recipient is the company or the body corporate, the recipient has to pay the GST on the reverse charge basis, right? Very, very interesting concept. Lot of clarifications have come. We will discuss that. Then next one is insurance agent is providing to any person carrying the insurance bill. Very simple. If you go to LIC or any other insurance company, a lot of agents will be there. These agents will provide the service to the insurance agent for which they get commission. So in this particular situation, insurance agent need not pay any GST. The person, the insurance company will pay the GST on the reverse charge mechanism. Same way, services supplied by recovery agent, banking companies or financial institutions, they appoint recovery agents in case of persons who are not able to repay the loans. So these recovery agents, whatever services are provided, that also comes under the reverse charge mechanism. Next one, services by music composer, photographer, artist, etc. by transferring or permitting the use or enjoyment of copyright relating original works. Okay. A.R. Rahman is there. His song Chaya Chaya was used in one movie called Invincible, I think. English movie, Hollywood movie, it was used. Here what has happened? I am the supplier of service, that is I own the copyright. I give it to that particular company for the purpose of usage. Here supplier of service is the music composer. Recipient of service is the music company. But in my example, of course, is located outside the taxable territory, so don't consider that. Let us assume he sold it to an Indian producer. In this particular situation, if the music composer or photographer gives the service to the music company producer who is located in India, that is in the taxable territory, then the recipient of service has to pay the tax on the reverse charge basis. Same way, author is there. Author is transfer or permitting the use or enjoyment of copyright relating to original literary works to a publisher. Okay, original literary works is there. He is transferring or permitting the use of the copyright. So I have written a book. It is totally my copyright. It is totally my property. But I have given the use for publishing, for printing and circulating among the public. I have given it to a publisher located in the taxable territory. Here supplier is the author, recipient is the publisher. So therefore, in this case, recipient has to pay on the reverse charge basis. However, author also has been given an option to pay under forward charge by filing a declaration in the prescribed form. But once he files the declaration, within 1 year, he cannot withdraw it. He has to at least use it for 1 year. So in case of an author, it is to a publisher pay on the reverse charge, but the option is also given to the author. Then members of overseeing committee to RBI, overseeing committee to check whether the bankers are following all the rules and regulations. They provide some services to Reserve Bank of India, reverse charge mechanism, RBI will pay. Then individual direct selling agent, DSA is there, freelance persons who help in providing loans, etc. Okay, for the you get multiple calls during the day, sir, you want any loan or whatever. So such case, they are all individual direct agents. So if they are providing the service to any banking company, reverse charge mechanism on the commission what they give, the banker will pay the GST on the reverse charge basis. Then services provided by business facilitator to a banking company. What is business facilitator? He does marketing for the bank and make sure he gets business of credit cards, loans, savings accounts, current account, etc. Such services for which whatever they get paid, the banking company has to pay the GST on the reverse charge basis. Then services provided by agent of a business correspondent to business correspondent. What a business correspondent, something like a journalist or a reporter. They have multiple agents who provide some services to them by giving information, etc. So whatever amount has to be paid to them on reverse charge, business correspondent will have to pay the GST. The latest addition to section 9(3) is security services. Security services basically providing security manpower. Here, but the supplier should be any person other than body corporate. So that means if the supplier of security services is a body corporate, then this clause will not apply. He should be any person other than body corporate. So therefore, he should not be a company. Any other, even LLP, he can be. If he is any other person other than a body corporate, recipient is a registered person located in taxable territory. In that particular situation, recipient has to pay the tax on a reverse charge basis. Fine. Okay. But again, same section is there. Nothing contained will apply to any department establishment if they have taken registration only for the purpose of deducting the tax under section 51. Then type of services provided by way of renting of motor vehicle designed to carry the passengers where cost of fuel is included in the consideration which is charged, right? If you are providing renting of motor vehicle, in that cost of fuel also you are adding to that only, and you are providing such service to the person supplier of service, any person other than body corporate does not issue invoice charging CGST at the rate of 6%. Same concept as GTA is given to this renting of motor vehicle also. Recipient of services, body corporate located in taxable territory. Provider of service, any person other than body corporate. But however, out of the two options which is given, he has to opt for paying without ITC at the rate of 5%. That is 2.5% in this case. Only then it will get covered under this particular clause. Then lending of securities, we already covered last time with regard to the GST applicability on the lending fee and the interest which is earned. Here what happens is the supplier of services, the lender who deposits the securities with an approved intermediary for the purpose of lending under the scheme. Recipient of service is the borrower. So any amount which the borrower pays on that, recipient of service should be, that is borrower, will have to pay on the reverse charge basis. There are additional services notified under RCM. Service supplied by any person who is located in non-taxable territory to any person other than non-taxable online recipient. In that particular situation, supplier is located in non-taxable territory. Recipient is located in taxable, but he is not a non-taxable online recipient. So therefore, for this purpose only, we got the definition. We understood the definition. So here, it is like an import of service where service is provided by a person who is located outside the taxable territory to any person other than non-taxable online recipient. Right? This also will come under reverse charge. Then transportation of goods by vessel from a place outside India up to customs station. The supplier of service is in non-taxable, recipient the importer in taxable territory. It will come under reverse charge mechanism. Same way as GTA, this option also is given here, where the renting and fuel together are included in the consideration. Two options are given. That is 5% without ITC or only limited ITC, and 12% without ITC. Right? So renting of a motor vehicle, these are the two types which are applicable, where GST is payable at the 5%. That is without input tax credit. If supplier is other than body corporate, then we have to see whether recipient also is body corporate. Supplier is other than body corporate, recipient is body corporate, reverse charge mechanism. If supplier is body corporate, recipient is other than body corporate, then reverse charge, then straight away you go to forward charge. So person is liable to pay the GST as the supplier. So these are the two situations given for renting of motor vehicle service. Right? So then director's remuneration, let us analyze this as well. But before we cover this, let us take a short break for 5 to 10 minutes and resume the concept. Meanwhile, please feel free to post your queries. Yeah, welcome back everyone. In queries, Gauri requesting me to use any language other than English. I'm sorry, Gauri, though I know other languages. The CA Institute has strictly told us to follow the medium has to be there in English only. So I have to tell it in English only. Even though I get tempted to use Hindi in the middle, but I somehow control it and make sure it is English only because it is clearly given, and I have to follow the guideline given by them. Fine. So now, so therefore, director's remuneration, to analyze it further. Here, what happens is the services provided by the independent directors or those directors who are not employees, okay, in lieu of uh, remuneration, they are outside the scope of Schedule 3. So the moment a director is a full-time employee, he is covered in Schedule 3 because it is an employer-employee relationship and therefore GST is not applicable. But in case of other than employees, if the director is not an employee, but he renders services to the company and is not an employee, then it is subject to GST under the reverse charge mechanism. So sometimes the services are provided both as an employee as well as a consultant or a professional. In that case, the main important thing is to check under which section the TDS is done, which section the tax is deducted. Under section 192, it is for salaries, and 194J it is for professional. So therefore, if the TDS is done under 192, then that means it is covered under Schedule 3, no question of GST. But if the TDS is done under 194J or 194C for that matter, in that particular situation, it will be covered under the reverse charge mechanism. Then the next point with regard to 9 subsection 5, specified services on which the tax is to be paid by the e-commerce operator. As I told you, what is an e-commerce operator? Any person who owns, manages or operates electronic platform for the supply of goods or services or both. Notification also is given with regard to the category of services supplied through the electronic commerce operator. So this notification covers the types of services which are covered by the e-commerce operator and the types of services for which the e-commerce operator is the person who is required to pay the tax on the reverse charge basis. First one is services by way of transportation of passengers by radio taxi, motor cab, maxi cab, and motorcycle. So Uber, Rapido, Swiggy also, Swiggy bike, wherever in case delivery, the transport of passengers is offered. In that particular, I don't know if Swiggy started that, but definitely your Rapido is there, your Uber is there, your Ola cabs is there. So these are very much there. So services which are provided by way of transportation of passengers, in this particular situation, the responsibility for deducting the collecting the GST and liability to pay the GST is totally given on the e-commerce operator. Next one, services provided by way of accommodation in hotels, inns, guest houses, clubs, campsites or other commercial places meant for residential or lodging purposes, except where the person supplying such service through e-commerce operator is liable for registration under 22 subsection 1 of the CGST Act. What does this mean? See, if you are providing services by accommodation in hotels, inns, guest house, clubs, etc., nothing but Make My Trip. In Make My Trip application, you can directly book the accommodation, you can directly book the vacations for residential lodging purposes. But only exception given here is, that is, if the person who is supplying the accommodation service, if his turnover is more than the threshold limit, that is what is given under 22 subsection 1 of the CGST Act. If his threshold is more than the threshold and is anyways liable to be registered, in that particular situation, that scenario is not covered, then he himself will collect the GST. So services by way of accommodation in the hotels, inns, guest house, etc., where the e-commerce operator is providing the service, but the person, that is the actual supplier, the person who is actually giving the service through e-commerce operator, if he is liable for registration under 22 subsection 1, that is if the threshold is created, in that particular situation, the e-commerce operator is not liable to pay the tax. Simple example, let us take let's example Hotel Utsav. Utsav is the name of the hotel. Hotel Utsav is registered in Make My Trip and it provides the accommodation service to any person who's booking through Make My Trip. You can immediately see Hotel Utsav and book it. Hotel Utsav's turnover is 15 lakhs in the previous financial year. That means he's not required to be registered under GST. So he has put his hotel profile in the e-commerce operator. And here what is happening? E-commerce operator will basically be the person who's liable to pay the GST. But in the same situation, if this hotel Utsav's turnover is more than 20 lakhs in the preceding financial year, that means he is liable to be registered under GST. Since he is liable to be registered under GST, he himself will collect the GST and not the e-commerce operator. So I hope this point is clear. So first one is transportation of passengers is covered. Second one, accommodation is covered. Third one also housekeeping services. Perfect example for this is urban company. In urban company, you can book the plumbers, carpenters, AC repairs, etc. Right? Here also, if that person is not liable for registration, then urban company will collect. But if this person has a GST registration, then urban company will not collect. But that person who is supplying the service, he will collect the GST. Fine. Now let us look at a few examples, few questions here. First one, Dr. Reddy Labs Private Limited agrees to sponsor a sports event organized by Hyderabad Golf Association in Hyderabad. The company has paid an amount of 50 lakhs for such sponsorship of the sports event. Consequently, the said event was named after the brand name of Reddy. Examine who is the person liable to pay the tax in the given case. So therefore, here what happens? Sponsorship service is being provided by Hyderabad Golf Association to Reddy Labs Private Limited, for which 50 lakhs amount is collected as a sponsorship amount. This sponsorship service is clearly covered under the reverse charge mechanism here. Because a body corporate is sponsoring, recipient can be any person. If this person is receiving that survey in that particular situation, 50 lakhs is being paid. And therefore, the persons who's liable to pay the tax. So if you look at this, go to this particular category here. That is your sponsorship service. Sponsorship to any body corporate or partnership. So supplier of service can be any person. So in this particular case, the supplier of service is Hyderabad Golf Association, who is getting the amount by Dr. Reddy Labs Private Limited. So therefore, recipient body corporate in taxable territory. So therefore, the person liable to pay the tax is the recipient of service. So therefore, Dr. Reddy Labs is required to pay the GST under the reverse charge mechanism. Next one, Mr. Anil Kapoor is a director in Suram International Private Limited. The company paid him the sitting fee amounting to 25,000 for the month of January. Further, salary also was paid to him amounting to 1.5 lakh for the month of January, on which TDS was deducted as per the applicable provisions, which is nothing but section 192 here, because he clearly mentions salary. Harshvardhan and Associates, in which Anil Kapoor is a partner, supplied certain professional services to Suram International Private Limited in the month of January for the amount of 2 lakhs. Discuss the person liable to pay the tax in each of the supplies involved given in the given case. So what are the supplies which are involved here? First supply, sitting fees is paid by the company to its director. That is 25,000. Second transaction, not a supply because it is employer-employee relationship, but still second transaction involved is salary paid to him up to 1.5 lakhs, on which TDS also was done. The third transaction is a professional firm in which Mr. Anil Kapoor is a partner, supplied professional services to Suram International 2 lakhs. So therefore, 3 supplies are involved here. First supply is sitting fee is paid by the director to the employee. So in this particular director to so company to the director. So on the sitting fee, since it is other than employment, straight away the company will pay the GST on the reverse charge basis. Then the second one is salary paid 1.5 lakhs. Since it is employer-employee covered in Schedule 3, neither a supply of good nor a supply of service, no GST applicability on that. Third one, just because in Harshvardhan and Associates, Anil Kapoor is a partner, it does not mean that it has to come under reverse charge. This professional services, whatever is provided by Harshvardhan and Associates, will be straight away under forward charge mechanism and not under reverse charge. I hope this point is clear. Further test questions. Suvidha Technologies is in the business of development of e-commerce platforms for various customers. Chennai Creations obtained the ownership rights of an e-commerce platform developed by Suvidha Technologies by paying a specified amount against the ownership rights of the portal. Chennai Creations also entered into an annual maintenance contract with Suvidha for technical maintenance of the said portal. Chennai supplies his own goods to the portal. Examine who is the e-commerce operator in the given case as per the provisions of the GST law. The definition of the e-commerce operator as per the GST law says that a person who owns, operates or manages the e-commerce portal or the digital portal, he is an e-commerce operator. Here what is happening? Suvidha Technologies is in the business of development, but he has developed and also given to Chennai Creations. So own, manage or operates is who? Own, manage or operates is straight away here is Chennai Creation, because the line is clearly given. Supplies its own goods or services to the said portal to the ultimate customer. Since the supplier is Chennai Creations itself, definitely here the person who's owning, operating or managing is again Chennai Creations. So who is the e-commerce operator here? Is Chennai Creations. It doesn't matter whether Suvidha has developed the portal, that doesn't matter at end. Whoever is owning, managing or operating, that person only has to be taken into consideration for the purpose of paying the e-commerce operator here. So therefore, in this particular situation, the e-commerce operator is Chennai Creations. Fine. So again, let's look at the rates of GST. As I told you, for different goods, different rates of GST has been kept. For many essential items, it has been kept as 0 also. 4 rates of GST have been notified for services: 2.5, 6, 9, 14, which is nothing but including SGST, it will be 5%, 12%, 18%, 28%. Some examples are given. Goods taxable at different rates: rough diamonds 0.125, jewelry 1.5, packed paneer, fruit juices 6%. Services also different rates are given. Air conditioned restaurant in 5-star hotel is 14% with ITC. In case of regular restaurant, it is 5% without ITC. Classification also is an important point. As I told you, in the first class, HSN system is used for classification. Chapter, heading, subheading, and tariff item are referred in schedule of the rate. Fine. Indian Customs Tariff, again, it takes from the Customs Act and so Customs Tariff Act, but the Customs Tariff Act is again dependent on the HSN, stands for Harmonized System of Nomenclature, Multi-Purpose International Product Nomenclature, developed by the World Customs Organization. This is for the purpose of classifying goods all across the world. So all across the world, same classification will be there. New scheme of classification also has been devised under GST, which is a modified version of the United Nations Central Product Classification. Service of various description has been classified. So chapter 99 has been assigned for services. Right? Chapter 99 assigned for services. Service accounting codes, SAC, is given for classifying the services. If you remember, we had covered a section 9 subsection 4 where we said that certain notified services wherein a registered person is procuring the services from a non-registered person. He is the person, the registered person should pay the GST on reverse charge mechanism, only certain specified services. What are those services? For that, we have to understand the real estate sector in brief before we go to what are the services which are specified in 9 subsection 4. Because the services which are specified in 9 subsection 4 purely relate only to the real estate sector. So to understand what exactly is given in that particular notified services, we have to see what is the real estate sector rate section. So therefore, here there are 2 things which are there. One is affordable houses, one is other than affordable houses. Yeah, affordable houses and non-affordable houses. So effective rate of GST are as follows. In case of affordable houses, wherein area is 60 square meters in metros, 90 square meters non-metros, and value is up to 45 lakhs. The effective rate of GST is 1% without ITC. Other than affordable houses and also commercial apartments in a residential project, where carpet area is not more than 15%. Sometimes commercial spaces may be there in a residential place also, because a gated community residential supermarket will be there. Therefore, commercial shops, offices, etc. may be there in residential real estate. But the cap is not more than 50% of the total carpet area. So in these two situations, the GST rate is 5% without ITC. Okay. Now, there are conditions which are given. That is, the above tax rates shall be applicable subject to the following conditions. First condition is input tax credit not available. The second condition is where section 9 subsection 4 comes into the picture. What does second condition says? It says that 80% of inputs and input services other than by way of development rights, long-term lease of land, etc., or FSI, etc. In this particular situation, they are used in this electricity, high-speed diesel has come by a typo, just ignore that. Okay, so 80% of the input or input services which are used in supplying the service shall be purchased from registered persons. That means what? Now, for example, in the construction, cement is purchased, steel is purchased. It can be multiple aspects will be there. Labor will be engaged. Now, what does it say? Out of this input and input services, assuming you are spending a total of say 1 crore for inputs and input services, at least 80 lakhs you have to procure from registered persons under the GST. If the total value what you are procuring from the registered supplier is less than 80% of the total inputs and input service, less than 80%, then on the shortfall only, not on the entire thing, on the shortfall, that is if you are paid purchase 75% from registered person, on 5%, right, on the shortfall you have to pay the GST on reverse charge basis. That is, let us take an example here. Builder has purchased 1 crore is the total expenditure. Out of this 1 crore, he has purchased cement, steel, etc. from registered person. So 75%, that is 75 lakhs he has purchased. But you're technically supposed to purchase 80 lakhs from registered person. So on this shortfall, 5 lakhs GST will be applicable and the GST rate is 18%. But if any product it is at a higher tax rate, then that will be applicable. So normal situations, reverse charge 18%, but in some product is 28% and you're procuring that product from unregistered person, you have to pay reverse charge also at the rate of 28%. Right? So this is basically your concept of 9 subsection 4 notified services. Then further clarification was given with regard to passenger service fee and user development fee, which is charged by airport operators for providing the services to the members. Now, what happens exactly here is airport operators authorize the airlines to collect the passenger service fee and UDF, user development fee, from the passengers. So airlines collect on behalf of airport operator from the passengers and airlines give it to the airport operator. This is what is happening. So therefore, there is a concept of pure agent, which we will see in value of supply chapter also. In this pure agent means what? He is actually an agent, pure agent of that person, and he is authorized to do the things on his behalf. Right? This is what is a pure agent. And the moment it is pure agent, he will not raise any invoice from his side. He will pay the XP, he will collect the amount and pay. So here what is happening? The airline is acting as a pure agent of the passenger. He should clearly indicate the amount of PSF and UDF, etc. So who is the person liable to pay the GST? It is very much the airport operator. Airport operator will pay the GST on the amounts collected from the passengers. Fine. So that was your section 9. Before we go to composition scheme, let me see if we have any queries. Now, what is this composition levy? Notwithstanding anything to the contrary, subject to the provisions of 9394, registered person whose aggregate turnover in the preceding financial year did not exceed 50 lakhs. Right? Now, composition scheme started off with 50 lakhs, but later there was also a provision given in this section itself, which says that the limit of 50 lakhs may be raised to amount not exceeding 1.5 crores as may be recommended by the council. So though the section says 50 lakhs, please remember that the amount has already been extended by the government to 1.5 crores. Fine. So therefore, what does it say here? Any registered person whose aggregate turnover in the preceding financial year did not exceed 50 lakhs may opt to pay in lieu of the tax payable by him. That is, instead of the tax payable by him, an amount calculated at such rate as may be prescribed. So, why this composition levy has come? So that to at least avoid the hassle cost to small scale taxpayers. Small scale taxpayers don't have the bandwidth to file the GST regularly. They may miss sometimes. For that, again, late fee will be pretty high. They cannot bear the brunt of the exorbitant late fee. So therefore, in that situation, the government is very clear, has given an option to pay the GST on the turnover. So here what happens? What is the limit? The turnover limit is aggregate turnover does not exceed 50 lakhs. That is the limit which is given. Right? So therefore, what is the rate at which it has to be charged? 1% of the turnover in the state or union territory in case of manufacturer. So manufacturer will pay 1% of the total. Again, this is only CGST. So therefore, SGST also will come. So net effect will be 2%. So don't take this rate which is given in the section for calculating, because this is only CGST section which is given 1%. So SGST 1% you have to add. So therefore, in case of manufacturer, it is 2%. Second concept is given to restaurant services. 2.5% of turnover in case of persons engaged in supplying this as per clause B of paragraph 6 of schedule 2. That is supply of food and beverages or any other article for human consumption. So in this case, 2.5%, that means 5%. So simple point if you want me to tell you, in case of composition scheme, tax rates will be 2% for manufacturer. For restaurant business, it is 5%. And third one, 0.5% of the turnover in case of other suppliers, subject to such conditions and restrictions. Therefore, simple terms, composition scheme for manufacturer is 2%, restaurant it is 5%, others, that means traders, it is 1%. 0.5% CGST, 0.5% SGST. So therefore, that is 1%. So therefore, a provision is given which says that the government by notification can increase the said limit of 50 lakhs to such higher amount, not exceeding 1 crore 50 lakhs as may be recommended by the council. Fine. I hope this is clear. Then there is a provision also which is given, provided further that a person who opts to pay the tax under A, B, C may supply services other than those referred to in 6B of Schedule 2 of value not exceeding 10% of turnover or state in the preceding financial year or 5 lakh rupees, whichever is higher. Now, what is this? What is this? Now, there may be a situation wherein a manufacturer or a trader may provide some other services, but such amount will not be very high. The amount shall not be very high. In that particular situation, a limit is given that up to this amount of limit you can provide. So let me take an example. A person is into selling of watches. He has opted for composition scheme. He also provides watch repair services for which he charges separately. He has opted for composition scheme. Okay, his turnover assuming is 1 crore. He can do watch repair services also in the same amount and same rate of GST, that is 1%. But there is a limit which is given. That is, if 1 crore is through sale of watches. Okay, then you have to do 10% of 1 crore. 10 lakhs you can do watch repair services also. Okay, basically 10% of the turnover or 5 lakhs, whichever is higher. So therefore, 10% of 1 crore is 10 lakhs. So 10 lakhs is higher than 5 lakhs. So therefore, in this particular situation, even the repair services can be covered under the 1% scheme only. Also, an explanation is given saying that in case of exempt supply, that is by way of giving loans, bankers giving loans, etc., where the consideration is interest or discount, that amount shall not be taken into consideration when determining the value of the turnover in the state or the union territory, right? Ten subsection 2, the registered person shall be eligible to opt under subsection 1, where other than what is provided in subsection 1, which is nothing but restaurant services, he is not engaged in the supply of service. That is first. Second one, he is not engaged. So he shall, the registered person can eligible, number one. Other than restaurant services, he is not engaged in the supply of services. Okay, so that he can only engage in restaurant services if he wants to apply under composition scheme. Of course, section 10 subsection 2A is different, which we shall cover, where the composition scheme benefit is also given to the service providers. So other than what is given in subsection 1, he is not engaged in supply of services. He is not engaged in supply of goods which are not leviable to tax. That means he will be eligible only if he is not making any supply which are not taxable to tax, leviable to tax under the act. Then he is not engaged in making any interstate outward supplies of goods. Very simple. Composition scheme means there should be only intrastate supplies. That is a rule which is given. It cannot be interstate outward supply of goods. Next one. He is not engaged in making any supply of goods or services through electronic commerce operator who is required to collect the tax at source under 52. Another new section has come. Let us discuss this. Similar to what section 51, as I told you, quite similar to that is the TCS, tax collected at source by the electronic commerce operator. Let me take an example. You are a restaurant. You are registered on the Swiggy platform. Everyone are ordering. Okay, everyone are ordering. That means you are not eligible to go for the composition scheme, because you should not supply any goods or services through electronic commerce operator. Then you can eligible for the subsection 1. You can go for the composition scheme, but don't make any supply of goods or services to the electronic commerce operator. Then he is not a manufacturer of such goods as may be notified by the government on the recommendation of the council. For certain goods like ice cream, tobacco, etc., this composition scheme benefit is not. So if you are a manufacturer of such products, you cannot opt for the composition scheme. He is neither a casual taxable person nor a non-resident taxable person. What is a casual taxable person? Or if you are going to some other state for just a few times, that is say 1 week, etc., for selling your products, that means you can go for a temporary GST registration, which is called casual registration, where you become a casual taxable person. And once you become a casual taxable person, you are not eligible for composition scheme. Even a non-resident taxable person, a person from outside the India comes into India for setting up the business, is a non-resident taxable person. If he is that, he is then also not eligible for composition scheme. Provided where more than one registered persons are having same PAN number, so registered persons shall not be eligible unless all registered persons opt to pay tax under that subsection. Now I have a business in state of Telangana. Another state of Karnataka, I have another business. Both are having the same PAN number. Now I cannot opt for a composition scheme in Hyderabad and say I'll pay under regular scheme in Karnataka. Fine. If you have two places of business, same PAN number is there, then you have to, all of them should go for that subsection, but provided these restrictions will be there. I hope this is clear. Before we go to 10-2A, let me see if you have any queries. Sir, purchase is project wise or overall purchase? No, this 80% of inputs or input services. So it depends on your accounting method, Mr. Rakesh. See, sometimes I would ideally suggest it based on the percentage completion method. It's commonly taken. So basically during the entire financial year, whichever revenue you recognize to the extent of the construction revenues received and whichever expenses you take into consideration. Okay, so you have to show the respective total amount of inputs or input services you have to calculate. If it is 80% from registered, nothing to worry. If less than 80%, on that shortfall you have to pay. Watch repair is a service other than rest. It is a service. I'm coming to 10(2)(a). See, services section, pure service providers are covered in 10 subsection 2A. But watch repair service, why example I took, is because of marginal supply of services. Marginal supply of services, you have to take under the same rate only. Marginal supply of services means 10% or 5 lakhs, whichever is higher. Up to this, you can take it under the same rate. Just for these other services, you need not take a separate rate. I hope it is clear. We'll do some examples as well, then you'll get more clarity. So, with regard to 10 subsection 2A, when the composition scheme first came, then lot of sellers were very happy, but the supply providers were a bit disappointed because they were expecting even the supply to come. But later, the government listened to the industry's grievances and brought out the section 2 capital A, which says, notwithstanding anything to the contrary content, subject to the provisions of 9(3) and 9(4). Why 9(3) and 9(4) I am taken? Because 9(3) and 9(4) is reverse charge mechanism. A registered person not eligible to opt to tax under subsection 1 and 2, whose aggregate turnover in the preceding financial year did not exceed 50 lakhs. That means this particular taxpayer is not eligible to opt under subsection 1 and subsection 2. That is, he'll not come under that one. Okay. So what is subsection 1? Your regular, those 3 items, manufacturer, restaurants and traders. And also for 2 is your marginal supply of service. So if he is not eligible to pay under that, then instead of the tax payable by him under regular tax, he can pay the tax at not exceeding 3%. That means total 6%. 6% of the turnover can be paid. Okay, on whatever turnover you have achieved on that 6%. But what is the condition for this? Aggregate turnover in preceding financial year does not exceed 50 lakhs. For services, if it does not exceed 50 lakhs, you can go for the composition scheme wherein 6% you have to pay, right? In case, so important thing to remember is for 10(2)(a) only services, the limit is 50 lakhs, but in the regular 10 subsection 1, the limit has been increased to 1.5 crores. Fine. So instead of paying the tax under regular tax, he can calculate the amount of tax at such rate as may be prescribed, but not exceeding 3% of the turnover. Okay. So what are the conditions which are given here? First one, he cannot opt if he has a condition, if he is making supply of goods or services not leviable to tax. That is engaged purely in exempt supply. No need to pay he cannot opt for this. Then engaged in making interstate outward supply of goods or services. The moment you say interstate, you cannot opt for the composition scheme. Engaged in making goods or services through electronic commerce operator. Very simple. If you have an electronic commerce operator, you are supplying through that, you can't opt for the composition. Manufacture of such goods, casual taxable as I told you for temporary registration, and non-resident taxable person also cannot opt for the composition scheme. More than one registered person are having the same PAN number, the registered person shall not be eligible to opt for the scheme unless everyone pay the tax as per that section. I hope this is clear. Then, please remember, the moment your turnover starts increasing, increase the limit, the option of composition scheme shall immediately lapse. So therefore, if you are availing an option under subsection 1 or 2A, that is subsection 1 for that 1.5 crores and subsection 2A for 50 lakhs only for services, if you are availing that option, in that particular situation, it will lapse from the moment the amount crosses more than 50 lakhs or 1.5 crores. Then a taxable person to whom the provision of subsection 1 or 2A shall not collect any tax. Please remember, in composition scheme, you are not supposed to collect any tax from the recipient. You are supposed to pay the tax all by yourself on the turnover which is achieved in those respective cases. Sometimes if the proper officer has reason to believe that this taxable person has opted for the composition scheme, but technically is not eligible for the composition scheme. So in addition to the tax which is payable, the officer has the power to invoke 73, 74 also, which 73 and 74 also, which talks about your interest and penalties. So therefore, if you are not eligible, still you opted, the officer may levy penalty on you. Now, for calculating aggregate turnover, you will take the value of supply from first April of the financial year up to the date on which he becomes liable for registration. That means from 1st April till he achieves 20 lakhs. Because once he achieves 20 lakhs, he becomes liable for registration. In that turnover, you will not include exempt supply, which is by way of extending deposits, loans, advance. So interest and discount will not. Okay. Then for the purpose of determining the tax payable, the turnover in the state shall not include the value. Turnover in the state, that is, it will not include the turnover supplies from first day of April to financial year 20 lakhs and exempt supply. So therefore, during the year, if you're opting for the composition scheme, first few months touch to 20 lakhs. The moment it touches 20 lakhs, you become liable for being registered. So for calculating the turnover, you will not take the turnover from 1st April till when he becomes liable for register. You will also not take into account the exempt supply which is being provided. So some important points in section 10. Objective of the composition scheme is mainly to solve the problems of the small scale GST taxpayer, to make sure that each one don't have to go to the complications of collecting the tax from the customer and also claiming the input tax credit. Complications of classification is eliminated. You don't need to give any, you need to give a bill of supply. You don't need to give an invoice, but you need to give a bill of supply. And in that, regular classification, etc. is not required. Quarterly payments is sufficient. Once in 3 months, you can pay and file the return. Then registered persons making interstate supplies or supplies through e-commerce operator, right? They are also not covered in this. Then turnover limit for manufacturers, traders, and restaurants is 1.5 crores. For other service providers, it is 50 lakhs. Fine. Few composition rates for manufacturers other than certain restricted ones. What are the restricted ones? Ice cream, pan masala, tobacco products, etc. In this particular situation, 2% is the rate of tax. Restaurant service 5%. Trades or any other supplier is 1%. Service providers is 6%. Then certain rules also have to be followed with regard to intimation of the composition levy. Rules also have to be followed here in this particular situation. So what are the rules which are required to be followed? Is intimation of opting for composition levy. Any person who is applying for the registration, so any person who is not registered and applies for the registration, during the course of applying for registration itself, there is an option that where he can click that he wants to pay the tax under the composition levy in part B of the registration form. So this, the moment he clicks this option, that itself shall be treated as an intimation to pay the tax under the composition scheme. That intimation shall be considered only after the grant of registration to the applicant, and his option to pay the tax shall be effective from the date on which the registration is effective. So the moment the registration becomes effective, from then itself he is liable to pay the tax. Intimation by a registered person. A person who opts to pay the tax under the composition scheme shall electronically file the intimation prior to the commencement of the financial year for which the option is exercised. It does not end with the initial registration. First time when you register, you give your intention of applying for the composition scheme. But from the second time onwards, prior to commencement of the financial year commences on 1st April. Before that itself, you have to electronically file the intimation. You have to electronically file the intimation saying that for this year also I'm going to exercise. So these are some procedures for composition scheme. Then you don't need to pay the tax on each invoice. In composition scheme, you don't need to pay the tax on each invoice, but you just pay the tax on the turnover every quarter. Then at the end of every quarter, you will pay the tax and without availing the benefit of input tax credit. So another significant feature of composition scheme is that he will not get the benefit of input tax credit. Without the benefit of input tax credit, he will work out the tax on the turnover and pay the respective tax. Then registration under GST law is compulsory for opting for the composition scheme. Two types are there. One is for goods and one is for services. Goods, as I told you, manufacturer 2%, trader 1%, restaurant service providers is 6%. Turnover limit, as I told you, 50 lakhs in the preceding year. But however, the proviso says empowers the government to increase the said limit of 50 lakhs to 1.5 crores on the recommendations of the GST Council. So in view of this, the government has actually issued the notification 14 March 2019 from 50 lakhs to 1.5 crores. For special category states, the limit will be 75 lakhs. So these states you have to keep in mind. Arunachal Pradesh, Uttarakhand, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura. These 8 states, the limit will be 75 lakhs. They may not ask you to, you need not have to remember this, but we never know. A question may be asked for regarding composition scheme where state of Arunachal Pradesh is mentioned. Then you have to remember that the limit there is 75 lakhs. Assam, Himachal Pradesh, Jammu and Kashmir and all the other states is 1.5 crores. Also remember, aggregate turnover is to be calculated on all India basis for a person having the same PAN number. Same PAN number, all India basis, the turnover has to be worked out. 10 subsection 2A applies only to service providers other than restaurant service providers, because restaurant service is also always covered under already covered under 10 subsection 1. So 10 subsection 2A, the turnover limit of 50 lakhs is there. So this limit, if you there, you become eligible for composition levy for services. Okay. So again, when it's a lapse, when you exceed the threshold of 50 lakhs, the option to avail the composition scheme will lapse. So what all will be covered under aggregate turnover? Taxable supplies, exempt supplies, export of goods or services, and interstate supplies. So these are some of the supplies which are covered in the aggregate turnover. Aggregate taxable supplies, exempt supply, export, but inward supply subject to reverse charge mechanism. What is inward supply subject to reverse charge mechanism? We have seen all those supplies where he has to pay. Again, even if you are registered as a composition dealer, you have to pay the amounts, if any, on reverse charge basis. That you cannot avoid. Fine. So you have to pay that a GST on reverse charge basis. Then turnover to also include the amount between April 1st till the date on which he is liable to register. So when you are calculating the aggregate turnover, you will also calculate the amount from April 1st till when he is registered. Fine, so we have already covered. Now, for example, a photographer, Mr. James Bond, has commenced providing photography services in Delhi from April during FY 21-22. His turnover for various quarters till December is as under. April to June is 20 lakhs, July to September 30 lakhs, October to December 20 lakhs. Is he eligible for the composition scheme? Please try to work out this problem. If answer is yes, what will be the tax required to be paid by him? Any answers for this? Why is he not eligible? Kaushiki, you said no, but why is he not eligible? See, turnover in state, what you have asked is nothing but the calculation for the purpose of composition scheme. Because aggregate turnover is a total turnover. For turnover in the state or union territory is also pretty much the same, right? But only thing, for turnover in state or union territory, you will exclude the turnover between the April 1st till the date on which he is liable to register. But for aggregate turnover, you will include that also. That is the only difference. 3.6 lakhs. How did you get this? Total turnover, if you see. Now, let me tell you. From April 1st, we have to see here. April 1st, what happened? April to June, he has 20 lakhs. So, therefore, for April to June, technically, he is not required to register himself. He became liable to register only during the month of June. During the month of June, he became liable to register. So, he applied for registration then. So, once he applied for registration, then he can opt for the composition scheme. So, 30 lakhs plus 20. But again, for the entire turnover, if you see, it has crossed 70 lakhs. It has crossed 50 lakhs. So how much is to be paid under composition and how much regular is what you have to think when you're answering this question. Any further answers on this? Kaushiki is answering. What about the others? I'm just waiting for you guys also. Any further answers before we go ahead? Yeah, let us examine this question. See what is happening here. If you see, April to June is 20 lakhs. So till then he is not required to register, right? But July to September is 30 lakhs. So he is definitely eligible for composition scheme because his turnover is not yet crossed 50 lakhs. So 20, but 20 lakhs he becomes liable for register. So then he gets himself registered under the composition scheme. But for calculating the total turnover, you have to take the amount before registration also. So 20 lakhs plus 30 lakhs, 50 lakhs, when it touches, his option lapses. So therefore, on 30 lakhs, he can pay at the rate of 6% because the service is not covered in 10 subsection 1. So on 30 lakhs, he can pay 6%, which comes to 1.8 lakhs. CGST 90,000, SGST 90,000. Then the moment it lapses, regular rate will be applicable. So 20 lakhs into 18%. So 3.6 lakhs plus 1.8 lakhs. Total 5.4 lakhs is what is required to be paid. Fine. I hope it's clear. 3.6 lakhs regular scheme and 1.8 lakhs under composition scheme. Okay, this is critical to understand. Though till April, May, June, you are not required to pay because it is not as 20 lakhs, but for the purpose of calculating the turnover, where the scheme lapses, you have to include that turnover as well. Now, who are the persons who are not eligible for composition scheme goods? So with regard to the goods, all these are not eligible for composition scheme. Supplier of goods not leviable to tax under CGST or SGST, right? Supplier of exempt goods not eligible. Supplier of interstate outward supply not eligible. Person supplying through e-commerce operator not eligible. Manufacturer of ice cream, pan masala, tobacco not eligible. Then any person who is a casual taxable person or a non-resident taxable person also is not eligible for the composition scheme. Then in 10 subsection 2A, for services who are all not eligible, supplier of goods or services not taxable, interstate outward supply, e-commerce operator, supplier who is either a casual taxable person or a non-resident taxable person is also not eligible. Marginal supply other than restaurant service, as I told you, second proviso is there in case of persons engaged in 10 subsection 1 other than restaurant service. Apart from the goods, they are also providing some limited services. Then a view has been taken for them to avail the benefit. But however, specified value is important. That is, it will be 10% or 5 lakhs, whichever is higher. What you have to take into consideration? Specified value is 10% of the value in the preceding financial year or 5 lakhs, whichever is higher. Example, Mr. Warner is engaged in supply of goods. His turnover in preceding financial 60 lakhs. He wants to start providing some technical consultancy services, whether he can do. So preceding financial year turnover is 60 lakhs. So 10% of that or 5 lakhs, whichever is higher, 10% of 60 lakhs is 6 lakhs. Since 6 lakhs is higher, he can provide the technical consultancy services only up to 6 lakhs as per the second provision. Fine. We have already seen this intimation for composition levy, rules of registration. You can file an intimation prior to the commencement year. So each year the option has to be exercised. There is no doubt about that. Apart from that, he also has to furnish a statement in the prescribed form. That is, what is the sale he has done, what is the GST he is paid, etc. Again, he should not be a casual taxable person, but tax has to be paid on reverse charge. Just because you are registered under composition scheme, you cannot escape reverse charge mechanism. On reverse charge mechanism, the tax has to be paid. He should not be engaged in the manufacture of restricted goods. Fine. Again, restricted goods as in illegal goods. Then he shall mention the words composite taxable person, not eligible to collect tax on supplies on top of the bill of supply. So he will not issue a tax invoice, but he'll issue a bill of supply. In that bill of supply, he will clearly mention the wording composite taxable person, not eligible to collect the tax on supplies. The word composite taxable person shall be mentioned on each notice or signboard. Every notice signboard will mention this composite taxable person. Validity option will be valid as long as the conditions are levied from the day the aggregate turnover exceeds the limit. The option to exercise composition lapses. We saw the example also. If he ceases to satisfy conditions, regular provisions will apply. Within 7 days, he has to file an intimation in the prescribed form. The moment he fails to satisfy conditions, he has to come to the regular scheme. Within 7 days from the event of satisfying the conditions, he is required to file an intimation in the prescribed form. Then, if the proper officer has the reasons to believe that the registered person was not eligible for section 10 or has contravened the provisions, a notice has to be issued to such person. Okay, who is not eligible for section 10 or has contravened, notice has to be issued. Show cause notice has to be replied, and then order will be issued. These are all procedures, not very important. That's why we are going through all of these things. Again, same PAN number, different registered persons. Everyone has to apply for composition scheme. Composition scheme person cannot collect the tax. Restriction to enter the credit chain. No input tax credit, so he cannot enter the credit chain. 10 subsection 5 read with rule 6.4 and 6.5 imposition. If you have not regularly, you have not availed properly, there is an imposition of penalty also. Fine. So with this, we come to the end of the composition scheme. Let us go through some questions. This Suvidha technology we have already covered. So Chennai creations is this thing. Now let us look at some other questions. Technology enterprises registered in Jalandhar, Punjab is engaged in manufacturing computer systems. Its aggregate turnover in the preceding financial year is 125 lakhs. Technology enterprises supplies the computer system manufactured by it within the state of Punjab only. With a view to expand its business operations, it will also start providing repairing of computer systems Fine. So whether they are opted for eligible for composition levy, right? So if you see here, yeah, can anyone answer first question? So if you observe here, preceding year turnover 125 lakhs, you can provide marginal services. The repairing services you can provide, but only up to 10% of the turnover in the preceding year or 5 lakhs, whichever is higher. So 125 lakhs, 10% is 12.5 lakhs. So therefore, it is very, very clear. He is eligible for composition levy under section 10. Since his aggregate turnover in the preceding financial year is less than 1.5 crores, for Punjab the limit is 1.5. So less than 1.5 is opted for the composition scheme. If he wants to cover the repair services also, in that particular situation, up to 10% or 5 lakhs, whichever is higher. So 12.5 lakhs till 20.5 lakhs, he can do the repairing services. Then he can opt for the composition scheme. Mr. Siddharth and Sons owns in Delhi owns a restaurant Tasty Food, turnover 1 lakh to 112 lakhs in the preceding financial year. In view of the growing customer demand, it will also start intra-state trading of juices in Delhi. Please answer this one. Yeah. So here what happens? Turnover is 112 lakhs in the preceding financial year. So Delhi less than 1.5 crores. So definitely can opt for the composition scheme because as per 10 subsection 1 this is a restaurant service. In view of it will also start intrastate trading of juices in Delhi. Very much applicable. Trading on restaurant and trading both also can be opted for the composition scheme, wherein the rate of tax on restaurant is 5% and on trading it is 1%. Sitaram Associates, registered in Sikkim, is engaged in running a food chain, veg kitchen in the state. It has a turnover of 73 lakhs in preceding financial year. In the current financial year, it decides to shut down the food chain owing to huge losses being incurred. Instead, it will start providing intrastate architect services. Whether they can apply for the composition scheme. So, if you observe, in the preceding year turnover, it is 73 lakhs. But now they want to open architect services entity. So therefore, in this particular situation, if you want to apply for other services, your turnover has to be less than 50 lakhs. So in this particular situation, since the turnover is 73 lakhs, therefore he cannot opt for the composition scheme because he wants to start service providing under composition scheme. Since he wants to start service provider, you have to check the turnover. Turnover is 73 lakhs in the preceding financial year. So therefore he cannot opt. Then Deepti Services registered Uttarakhand exclusively provide hairstyling service turnover 34 lakhs. Will your answer be different if Deepti Services also start supplying beauty products along with hair styling services in the current financial? You can very much supply the products as well. There is no problem. Fine. So therefore, preceding financial year, it is there 34 lakhs. So definitely, since it is less than 50 lakhs, she can start it. And supplying of beauty products also is covered. There is no problem. So along with that, supply of beauty products also can come under the composition scheme. Now, this slightly big problem. B&D company in a partnership firm, Nagpur, Maharashtra, is a wholesaler of taxable product P and product Q exempt by way of notification. The firm supplies these products only in eastern part of Maharashtra. All the procurement are from the suppliers registered regular scheme. The firm pays tax under composition. B&D company of one is the following. Now, this problem basically is on how to calculate the aggregate turnover and how to pay the tax as per the composition scheme. Turnover for quarter ended 30th June. P taxable 160 lakhs. Q exempt 17 lakhs 65,000. Turnover for this 39 is 50 lakhs. 70 lakhs is the 50 lakhs is for taxable product. For 17 lakhs exempt product Q it is 17 lakhs. Now the extract of the bill book shows the following. So bill book shows all of this. Why these amounts are relevant for us is for us to calculate the total as to how much it has gone, whether it can go for the composition scheme or not. Okay, or in case it has lapsed, what we have to do. So that we have to check this. Then further, B&D company paid freight of 1,40,000 to goods transport agency during the period April to October. So April to October they paid some fees. So that is basically for 7 months. Assume equal amount of freight is paid each month on 10th of each month. Also assume the goods for which freight is paid on 10th June are transported between 11th and 20th of the next month. Fine. So compute the GST liability for the period April to October we have to calculate, showing the calculations for each chapter separately. Make suitable examples. Rates on service is 2.5%. Stock is valued at cost price. So just go through this problem. Just make a note of all this. Then let's look at the solution. So fine, work out the turnover first. For calculating the turnover, you have to take the taxable and exempt both. After calculating the turnover, let us see what has to be done. So if you see here, first you have to calculate the turnover. If you look at the turnover here, P and Q both have to be taken into consideration. So please take out your calculator. 60 lakhs is P till 30th June. 50 lakhs is again P till 30th September. Okay. Again, he's talking only about the quarter. So these both you have to add. Then for Q, 1765,000 for 30th June quarter and 17 lakhs for 30th September quarter. So total comes to 1 crore 44 lakhs 65,000. Composition scheme is eligible up to 1.5 lakhs, 1.5 crores. So therefore 1 crore 44 lakhs 65,000 was there till 30th September. Now from 1st October, what is happening? Again, you have to add both taxable and exempt. So add 2 lakh 3,000. Then add 1 lakh 38,250. This should be added to 1 crore 44 lakh 65,000. Okay. So 2 lakh 3,000 plus 138,250. Okay. Then 1 lakh 6,250. Then it becomes 1 crore 49 lakh 12,000. Then 92,500. So therefore, it becomes 1 crore 50 lakh 5,000 on 3rd October. On 3rd October, it becomes 1 crore 50 lakh 5,000. That is when the total amount is taken into consideration. So therefore, So compensation scheme can be paid up to 3rd October. So therefore, what is the turnover of P? Turnover of P here is 60 lakhs quarter 30th June, 30th September 50 lakhs. So therefore, 1 crore 10 lakhs is there. And for quarter till 31st December, you have to take 4 lakh 3,000. How this 4 lakh 3,000 came? 2 lakhs plus 136,000 plus 67,000. Okay, 2 lakhs plus 1 lakh 36,000 and 67,000. These three you need to add it to 1 crore 10 lakhs. 1 crore 10 lakhs, how did we get? 60 lakhs taxable here, 50 lakhs taxable here. Then you add the balance. If you add the balance, you will get the total term. Fine. So even though the total is 1.5, compensation scheme only on the taxable items. So that is 60 lakhs plus 50 lakhs plus 4 lakh 3,000. On this, CGST 1%, SGST 1%. Right? So this is what you have to calculate. So 60 lakhs CGST 0.5%, SGST 0.5%, 25, 25, 2015, 2015. This is your total CGST and SGST on the turnover of the taxable supplies. Then, apart from that, if you see, RCM also is very much applicable. So, RCM also is very much applicable here. Now, here he says that RCM is paid on 10th day of each month. 10th day of each month. So, therefore, from April onwards, it has been paid. April, May, June, July, August, September, October. Okay. For 7 months, he has paid also the inward supplies on RCM. So, therefore, in this particular situation, if you see the inward supply on tax on which regular basis, so 7 months he has paid totally 1,40,000. Okay, 1,40,000 he has paid the total of 7 months. Therefore, the inward supply for 3 months, 3 quarters have taken into consideration here. That is April, May, June, July, August, September, October. So how we got this is 1,40,000 is the freight which is paid for the period April to October. Fine. April to October, 1,40,000 is paid. So for 7 months, it comes to 20,000 per month. So here we are calculating per quarter. So 3 months in this quarter, 3 months in this quarter has to be taken into consideration. Right. So therefore, if you observe here, total is 1,40,000 is the amount paid to the GTA. 1,40,000 divided by 7 months is 20,000 per month. So per quarter, April, May, June quarter, it will be 60,000. July, August, September, it is 60,000. Why nothing will come in October? Because we are doing the working only till 3rd October, because that is when it crosses the compensation scheme, and on the amount is paid only on the 10th of each month. That is why we are not taking any inward supply RCM for quarter ended 31 December, because RCM will get triggered only on the payment basis. Time of supply, you will read these provisions. So 60,000 is your GTA service for this quarter, 30th June, and for 30th September, it is another 60,000. So 5% is the rate on RCM, which comes to 1,500 CGST, 1,500 SGST for both. So total is 31,500 CGST, 26,500 is for this quarter. So total CGST is 60015 and total SGST is 60015. Slightly elaborate problem, slightly tricky, but you will be able to get it in if you read it carefully. So this is the way you will have to work out the tax in this particular situation. Then Shubha Lakshmi Foods is engaged in supplying restaurant service in Maharashtra. Preceding financial year, it had a turnover of 140 lakhs from restaurant service. Further, it had earned the bank interest of 20 lakhs from fixed deposit. You are required to advise whether it is eligible for compensation scheme under 1 and 2 of section 10 in the current financial year. Further, assuming that in the current financial year, turnover is 130 from restaurant, 10 lakhs from supply of farm labor in Maharashtra. They also earned the bank interest of 30 lakhs from fixed deposit. Compute the tax payable by Shubha Lakshmi Foods in the current financial year. So if you see here, last year she has a turnover of Shubha Lakshmi Foods restaurant service 1.4 crores. So limit is 1.5 crores. It is less than that. you should not add the bank interest of 20 lakhs to 140 because clearly it is given in the section. Any exempt supply by way of extending loans or advances should not be taken into consideration while calculating the aggregate turnover. So therefore, very much she is eligible for the composition scheme because it is less than 1.5 crores in the preceding financial year. So current financial year, turnover is 130 of restaurant, 10 lakhs of farm labor. Also earned the bank interest of 30 lakhs. As I told you before, on the bank interest is exempt, there will not be any tax on that. 130 lakhs is there for the turnover, and 10 lakhs is there for supply of farm labor. So farm labor, you can do, as I told you, marginal supply is available to the extent of 10%. So 10% of 130 is 13 lakhs or 10 lakhs, whichever is higher. So definitely that facility is also there in this particular situation. Fine. So how do you calculate the tax here? How do you calculate the tax here? The tax will be calculated at 1.3 crores. 1.3 crores rate is 5% for restaurants, and 10 lakhs also, since it is below the marginal limit, it will get added. So 130 plus 110, 140 lakhs into 5% will be the tax which is applicable. So 1 crore 40 lakhs into 5% will be the tax which is applicable. So that comes to 7 lakhs, CGST 3.5, SGST 3.5. Okay. So therefore 130 plus 10, this 130 has to be taken into consideration, and this 10 will be taken into consideration because it is less than the 10% limit which is given for the marginal service. Also bank interest 30 lakhs, you will ignore. Next question. Bansal and Chandiok started a partnership firm of chartered accountants in Jaipur on 1st April. Firm specializes in audit services to banks in Rajasthan. It provides the details of the turnover. April to June 10 lakhs and July to September 20 lakhs. So basically the question is whether they can opt for the composition scheme. And the tax payable also has been asking. Question is it is also asking the whether eligible for composition scheme and tax payable for each quarter. Right? So therefore, if you see here, April to June, it is 10 lakhs. So that means not yet crossed the limit of the registration. 20 lakhs is the limit. So therefore, for April, May, June, there will be no tax. Fine. And July to September, it is 20 lakhs. So limit is crossed during July to September. So after 20 lakhs, it will start triggering. So total 30 minus 20 for threshold, 10 lakhs is what is left out. So 10 lakhs into 6%, 60,000 is the answer. Fine. So therefore, tax to be paid on 10 lakhs at the rate of 6%. Fine. I hope this point is also clear. Next. Harish Chandra of New Delhi makes a request for a motor cab to super ride for traveling from New Delhi to Gurgaon. After he pays the cab charges using the debit card, he gets the details of the driver, Jorawar Singh, and cab registration number. Super Rider Ride is a mobile application owned and managed by Peri India Limited. Application facilitates a potential customer to connect with the persons providing the under the name of Super Ride. Claims that cab service provided by Jorawar Singh, hence he is liable to pay the tax. With reference to provisions of IGST, determine who is the person liable to pay the GST. So tricky here is, don't by mistake also mention 9 subsection 5, because he's in the question is asking provisions of IGST. So you have to give 5 subsection 5. If you remember, if you don't remember, don't mention any section. I have passed my CA exam without mentioning a single section in any of the law papers. So therefore, writing the section numbers is not relevant. We are not having a memory competition. Conceptual understanding is the key. So therefore, in this here particular situation, 5 subsection 5 cast the responsibility on e-commerce operator in case of certain specified supplies with regard to transportation of passengers through radio cab, maxi cab, clearly given as a notified or specified service. So therefore, in this particular situation, the person liable to pay the tax is Peri India Limited. So therefore, the contention of Peri India Limited that the tax has to be paid by Zorawar Singh is incorrect. MN Limited has 2 registered places of business in the state of Haryana. Aggregate turnover during the previous year was 62 lakhs. Wishes to opt for composition scheme under warrant for 1 place in the current year. Wants to continue the regular scheme, pay tax at normal rate for that. Can we do so? Very simple. We have already done in the section that if you have opted for composition scheme for one particular registration and related to the same PAN number, for other PAN number, other registration also, you have to go for composition scheme. So if you want, you go for composition scheme for both the businesses. Otherwise, go for the regular scheme. But you cannot go in one composition and one regular. Ranveer Industries, registered Himachal Pradesh, engaged in making interstate supplies of ready-made garments. Aggregate turnover preceding 70 lakhs. It has opted for composition scheme and paid tax under composition scheme, whether it is correct. Proper officer has levied the penalty for wrongly availing in addition to the tax payable by it. Very, very simple. A condition given in the composition scheme is that if you are making interstate supply, you are not supposed to register for the composition scheme. So therefore, only interstate supply composition scheme is eligible. So since he is making interstate supply, definitely he cannot opt for the composition scheme, and definitely the proper officer as levying the penalty as well as the tax is the right course of action. Fine. So with this, we come to the end of chapter number 3, that is charge of GST. I hope all of you have followed the discussions. A small recap of what all we discussed. We have seen the levy section. We say the concept of interstate supply, intrastate supply. We have seen the concept of composition scheme. We have seen the list of supply of goods and services who are subject to reverse charge mechanism. And we have also worked out some problems based on the composition scheme and the reverse charge inverse supply as well. So with this, we come to the end of this day's session. And one second, previous doubt. If an asset is written off on the books, should be considered as a disposal treated as supply, or is it considered as a mere book adjustment? It is definitely a disposal and it should be treated as a supply, because very, very clearly given in schedule that disposal of asset without consideration, in case you have availed the input tax credit, is a disposal. But in case you have not availed the input tax credit, then there is no need, it's not a supply. So therefore, in this case, asset written off also is to be treated as a disposal. Fine. So with this, we come to the end. So therefore, we have our next session on Tuesday at 6 p.m. where we will cover chapter number 4, exemptions from GST, and also work out the various problems based on that. So with this, your initial foundation for GST will be set, and you will be ready for your classes starting for time, value of supply and place of supply, which some other faculty will be taking post my completion of the Tuesday session. Then I shall meet you once again in the month of February to take the one of the most favorite chapters of everyone, input tax credit and the various complications arising from it. Thank you very much. Have a nice Sunday. Study well, and hope all of you are preparing in a good manner. Thank you. Today there was good network, good Kaushiki. Maybe it was on Sunday. It is a good network, but the internet was always strong in my case. It is always strong because I keep checking on and off whether the video is coming or not. But definitely I'll try to stick to the same location in that case from my side at least. And definitely I think the network was good from the BOS side as well. Thank you very much. Have a nice day. I will see you on Tuesday at 6 p.m. That will be an evening session as always. Thank you very much.